Ay. I said, excuse me, but you don't understand where I'm at. I was all around the world, on span, across the map. I've been laying low and now it's time to pop up, bitch, I'm back. Now I'ma run it up. Snooze on the kid, that you dumb or what? You better go get your numbers up. Now throw me the oop. I gotta hire a Jerry Maguire. I'm tired of hearing it. Show me the loot. I had to listen, they told me to shoot. Like it or not, man, I told them the truth. I stay away from the things that be causing me trouble. Just out here enjoying the view. Seeing shit I never had, boy, I used to be a bad boy, and now I'm in my bag, boy, I know. I don't do the rumors or the tabloids, I'll let you handle that noise, that shit doesn't last, no, it's true. Each time that I move, ayy, my free time ain't free time, it's peace signs if you snooze. I got crease lines in my shoes, walk with me, you see what I do. Walk with me, you see what I mean, show you how to see it right through. I said, excuse me, but you don't understand where I'm at. I was all around the world, on span, across the map. I've been laying low and now it's time to pop up, bitch, I'm back. Now I'ma run it up, snooze on the kid, that you dumb or what? You better go get your numbers up. Really on God, getting paid for this shit while I drink on the job. They so desperate for some clicks to the links on they blog. Being real, man, it's nothing but exhaust. Come on, I said excuse me, please. Why they speak like they knew me? Right from the gate, I had all of it written. When they speak of grace, knowing they didn't include me. It took me a while, I weathered the storm. Bitch, why you hating? Get better informed. No room to slip when the pressure is on. You wasn't with it to move it along. I said excuse me, you don't understand where I'm at. I was all around the world, on span, across the map. I've been laying low and now it's time to pop up, bitch, I'm back. Now I'ma run it up. Snooze on the kid, that you dumb or what? You better go get your numbers up.
Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, check the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the fake and this ain't plastic, girl. Bought a new whip and cash, now my taxi thorough. Way I'm shooting like step with my passes, bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. Whoa. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Yeah. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm good now. Said I had to go and put my foot down. Told them I'ma get it and go. Nah. Even in the summer, man, they knowing I'm cold. I got a couple checks coming that I made out the flows. Might get a couple more popping if I do it some more. I gotta do it for real. Said I'm back in my bag. All my digits are climbing just like they all on a dash. And they tell me slow down cause dog I'm moving too fast. Might go and caught me a Tesla cause dog I still got a gas. Said I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go, here we go. Yeah, we we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like. Yeah, you about to see me on demand like. You know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream. We got FOMC coming up here. Some crazy volatility incoming. I'm going to cover the live price action with you guys. We'll watch the press conference. We'll probably fall asleep during it. But yeah, I believe there is no expected change. So I don't know. We'll probably see the typical wash it up, wash it down, or should I say wash it up, wash it down, and then just continue going sideways. But we got some key levels that we're looking at, and we'll see if we can push into those key levels. Maybe we'll take a live trade if we can get a setup. No promises, but if we get the setup, we're going to have to take the trade, and we'll see if we get wrecked trading this crazy volatility. But shout out to the Mafia. Welcome in, guys. Thank you for tuning in. We got Rudy in the chat, Lindo, Captain Kirk, what is going on? Darren does things. Jesse, what is going on, guys? New Earth Guardian said, ain't nothing fun happens anymore. I don't know if you're talking about the price action, but I would have to tend to agree with you there, brother. Let's see. We got Sean in the chat. What is going on? Tatty Crow said, hi, Jesse. How you doing? Hey, Mafia saying, what's up to the Mafia? Let's go. We got to come up with a secret handshake. But, guys, we got, what time do we got here? Yeah, we got about 9 minutes until we get the decision. So let's jump into the charts. I'll do a quick breakdown. We'll cover some of the TA, and then we'll watch the press conference and see if we can get some of that crazy volatility. So let's go ahead and jump on into the charts. Let's get into it. All right, so here we are. Shout out to Obi-Wan said, pull up a pillow and prepare to pass out. Yeah, probably my expectation, guys. Like recently, the live FOMC has been kind of boring as far as price action. But yeah, I'll break down kind of what we're looking at here. We do have some major key levels that I'm looking at. Now, if you guys watched the live stream yesterday, you will know that I am holding a long position, a nice little scalp long here from the value area low. Of course, this has not played out in full just yet. We hit one take profit right here at the POC. And then finally, you know, the bigger level sitting up here at the value area high. Daily golden pocket confluence with the 786 sitting just above that. This is sitting between about 65.2 and 65.964. So this is going to be the local key level to the upside that we're going to be watching. We'll see if the volatility can push us up there. And then, of course, just underneath us, we do have the value area low, and the daily horizontal. Value area low has been tapped. Daily horizontal has not, sitting at about 62.2. So this is going to be kind of the range that we're working with today. And then who knows, right? If we get some kind of massive dump to the downside, we could turn off that local range and pull up this beautiful higher time frame, medium-term range with our key level here at the golden pocket value area low, sitting at about $61,200. Now, one quick thing. Shout out to Darren or Jesse or Cap. If you guys can help me out while I'm looking at the charts here, let me just pull this up real quick. Let me just pull it up here. Bada boom. The expectation here on FedWatch is obviously for no change. Typically when we see that, guys, that is what happens. Maybe we should start betting on this stuff because it literally has like a 90% hit rate. But the expectation is no change. If one of you guys could just drop it in the chat. You don't have to super chat it. Just drop it in the chat so we know if I'm looking at the charts when that comes out. We're expecting no change. Of course, if we're going to see some like really crazy volatility, if they say something unexpected, if they raise or lower, the unexpected thing happens. We could see maybe the gigantic move. But for now, we're going to keep up those local levels here. And we're going to be watching the charts. So we'll see. If we can get above the POC, could eventually, right, like just from a general TA perspective, on a normal day, the expectation here would be to see this volume profile fill in full. Maybe the volatility steps on that, but we'll see what happens. See if we can flip that POC once again. And if not, we got this key level sitting right down here. We also have some key levels here on Ethereum that I'm going to keep an eye on. Let's pull this up on a lower time frame. Of course, we are still within our upper, larger volume profile. Let me just go ahead and hide some of these other horizontals so we can get a nice clear view of the range, right? So we're just still chilling around this value area low. We got the key 786 sitting here at 1834. If we lose that, we're going to be watching very closely this key support level sitting between the POC and value area high of the range with two dailies in between, as well as the anchored VWAP pulled from the absolute low of the move here. This does sit between $1,800 and 1734, right? So come down here, lose that, looking to come down here, and we'll see if we can get that push. If not, maybe we just continue to bing bong around in this little sideways range that we got going on right here. So we'll keep an eye on ETH as well. Maybe we'll take a look at some of the altcoins a little later. But let's see. So what are we thinking here? We got the poll saying pump or dump. We got 46% say nuke, 22% say pump, and 32% say nothing burger. I thought nothing burger was going to win there, but can't always be right, I guess. 6 minutes left. 5 minutes left. Shout out to Jesse. Let's see. Shout out to Darren. Said, Vincent, volume profiles and the Frankie Candle Sauce is goated. Hey, shout out to Darren. Does things. I appreciate you, bro. Shout out to Vincent. Said, bro is the most surgical trader in the game. Bro snipes prices. Shout out to Vincent. We try, brother. We try. I appreciate the kind words. And I mean, listen, more often than not, we are pretty accurate. Of course, I do always try to like fully disclose. Of course, I have been wrong before. I will be wrong again. That's part of the trading game. But pretty proud about how accurate we're able to be here on the prices. So let me actually just pull up the long position here. So this is the current long. We'll see. If this gets stopped out, I will get stopped out at break even. No big deal. Already took some profits on that, so still a small win. And of course, I am still holding my bigger long position from down here. I'll have to redraw this because I don't know if I have it on the chart already. I am still holding the long position from down here at about $58,000. And I'll pull those trades up in a little while. The next target, I've already taken profits on the long from 58K. Really, the next target for the long from 58K is going to be to take out those highs around $67,200. Same trade I've been holding forever. I've shown it a million times. But maybe I'll pull it up a little bit later in the stream as well. So let's see here. Depends if Golden is buying or selling. Yeah, Golden could just drop a fat bag real quick. I bet you he could pump the price a couple percent. So much liquidity above. Yeah, let's bring up the liquidation heat maps as well. Typically, you see the bulk of the volatility come during the press conference. So looking at here at a higher time frame, guys, we'll go high time frame to low time frame as far as the liquidity goes, because typically, guys, on FOMC, oftentimes what we see is the usually in the beginning, right, you'll see the sweeps of liquidity during everything, and then usually, right, the first move is oftentimes the kind of fake liquidity sweep, and then it picks a direction, or just recently we'll sweep the liquidity up, sweep the liquidity down, and then continue chopping sideways. I could probably actually pretty accurately snipe the last FOMC wick by just the visual look of the candle. But we'll see. Just oftentimes you will see, like, for instance, right, just for example, this is not true, but say we have liquidity here, usually it'll sweep it, and then either wiggle sideways or actually sweep and then pick the direction. So we'll see what happens. And obviously I will narrate it live. Maybe we'll pull up that 1 second chart as everybody loves to see. Okay, so let's take a look at the liquidation heat map here real quick. So higher time frames, guys, of course, between about, call it 61.6 all the way down to that $60,400 level is the kind of big area of liquidity down below us, which, of course, does sit basically right about here, right? If we are able, and, you could argue, or not even argue, but, right, you could say you have liquidity here, liquidity here, liquidity here, right? So we essentially just have liquidity sitting all over the place here, right? Stops, and then the massive amount of liquidity below that big wick down here at 61, about 61,209, right? So in the case of potentially getting a major rejection back down here, if we do take that out, we could get a big liquidity sweep wick. The thing about this is actually right on top of our golden pocket value area low, right into that Fibonacci retracement zone. And as you guys know, this is very important to understand. This is going to be the biggest level on the chart, the golden pocket 786 retracement. We've taken a look at this over the past forever, right? Ever since we put in this high, essentially. Even before that. But, if we are going to hold up, I'll even just view this from a raw price action and Fibonacci perspective, right? This is going to be the major golden pocket retracement, or golden pocket 786 retracement, right? Come down here. I personally would not want to lose the golden pocket, because remember, we do have the daily bullish divergences confirmed here with our money flow coming up into the green. VWAP also attempting to curve up. So when we see these massive confirmations, the hope here for the bullish case, I guess I'll just go over the bullish case real quick. Bull divs confirmed at the low. Very nice confirmation. Already seen it play out for a very nice move to the upside. But if we want to see this turn into a much larger trend, potentially up towards about $77,000. Money flow is on your side, at least as of right now, but we must hold on top of this Fibonacci retracement. Once we start losing around 59K, I will be expecting a break, invalidation of that trend, and a break below $57,000. In that case, I will stop out of my long position from 58K in profit, but that is the biggest level, right? Sits between 61,000 all the way down to about 59.5. Still the same key level we've been looking at. So, yeah, anybody who might be tuning in for the first time, Jesse counting it down by the second here. It's time! Shout out to Captain Kirk. So, yeah, the high time frame money flow, like the dailies here, guys, this is the clear, right? This is where we have the high time frame confirmation. And, of course, the high time frame indications are going to be much more macro, right? More significant, I guess you can say. Someone just said the 1 hour money flow is coming out, in which case you would be absolutely 100% correct. But a 1 hour money flow crossover could essentially, right, when we look at the money flow, it indicates the overall trend. So when we look for the trend to continue here, right, maybe lower high, lower low, lower high, lower low, lower high, lower low. Even if that 1 hour trend continues, you do still have to understand you do have that macro $61,000 level down here, and that could just be a little ebb or flow on the daily for the higher low and the potential higher high, right? I can't guarantee this is going to be the case. This is the critical level to hold up, right? I'm not going to cover the lower levels. Obviously, breaking below 57K is around, right, just breaking down below the lows. So somewhere down here, we do have some key levels of support down there. We got a weekly MPOC at about 56.5. But I don't know if we're going to see that today. But, if we do break down, just to give you guys an idea of where I'll be looking at below, 56.5. And then I believe we also have a weekly down there at about almost 55K. And we also have an untapped daily. So I would probably draw this as the zone of support below the lows. Bada boom, right? 57.3 to 56.5. But that's obviously very far away. So we don't have to pay attention to that right now. Pull back up the local range. And let's see here. All right, back above the POC. Are we going for the value area high? Are we going to do it? Let's set the alert. Bada boom. No change. Shout out to Darren. Thank you for that, brother. Wow. I appreciate you so much, Darren. Shocker there with no change, guys. Obviously, that was expected. So, oh, man, we may see a bit of a nothing burger. But let me just pull up this liquidity real quick. So, of course, you have the macro liquidity sitting down there leading into the golden pocket. Upper macro liquidity, of course, is sitting above about 67, around that $68,000 high, pulling up the chart. Right? If I were to draw these out as boxes, right, you have the liquidity. Of course, I don't know if we're going to get down there today. And then the bigger amount of liquidity above is going to be sitting right here. And this does, I would pull up to about $68,000. So, you know, macro-wise, sweep it, continue. And then maybe we sweep it again and come back down. But if we come up first, right, we might be able to come up. Once we start breaking those highs, we could see that liquidation wick. Opportunity for short positions. We have some setups in the premium Discord to look for shorts here. But of course, guys, once we come up to that $68,000 level, please be aware that this is the major level to break that could indicate that we are going to get accepted into the profile and start continuing up in full to fill that entire volume profile up towards 71,440 at first. And then eventually we could start looking up towards those macro targets at $77,000. Again, I don't want to get too carried away. I'm not saying that's guaranteed. I'm not saying it has to happen, but that is an if this, then that, right? If we don't ever come up here and sweep the liquidity and have an opportunity to break inside the profile, well, of course, we're not going to be looking up towards those higher targets. But I would say from a macro perspective, right, deviation below the low, major confirmations, daily money flow, coming into the green, there is an open opportunity to get in here and start a bigger trend to the upside. The only thing we need to do is stay above that $61,000 level, $60,000 to $59,000, I would call it. The same Fibonacci retracement I just brought up before. Wake me up after September. Yeah, guys, this is not uncommon of summer price action. Typically, the summers are quite boring. So, you know, not super uncommon, you know, summer bear market activities here. Let's see. July closes in the green. August closes in the red. Historical data follows the trend. Could totally be the case. I know July is typically a bullish month. The one thing I will add as a caveat to that is, well, I guess the daily money flow is pointing for July to be a green month. I mean, yeah, we're almost there. Unless we get some kind of crazy nuke below the lows here, it looks like this is going to close green, you know, separate from any kind of, you know, crazy catastrophic dump. But, you know, just in general, not in this particular case, but just in general, when it comes to, you know, this month is typically red, right? That is true, right? You can just look back at the historical data. However, you know, if we'll just pick a random month, September is typically bearish. Oh my God, right? If I see major bullish confirmations on the chart, I am not going to go based off of that, you know, if 8 out of 12 Septembers are, 8 out of 10 Septembers are green, and I see bullish confirmations on the chart, I'm not just going to say September is going to be red if the charts are pointing in the opposite direction. I am always going to go with what the charts say, but in this case, right, we're basically almost there. Closing July is green. So, again, we need some kind of aggressive drop to the downside. But back to the liquidity here, guys. You got the upper liquidity, lower liquidity. Let's go down to the lower time frames because we do have some local liquidity to look at as well, which is probably going to be a bit more relevant, at least for the local move. So you can see here we do have a lot of liquidity sitting up here at about 65.7. So let's pull that up on the chart here. Yeah, so right above this wick, let me just see where that runs into. 65.7 into about, 66.7. Yeah, so, you got a lot of liquidity above. You got liquidity above these highs, basically leading you into the upper liquidity above. So if I were to draw another box here, right, you got liquidity above this wick. Basically leading you directly into that liquidity. So we got a lot of liquidity above, and then you got a bunch of it below. So we'll see. Let me pull up that local range once again. Bada boom. And we'll see here. See if we can hold on top of that POC. Shout out to Super Sammy. Wanted to make sure I got that right. Shout out to Super Sammy. Thank you so much for the super chats recently, bro. You've been supporting like crazy. We appreciate it, brother. He said, Frankie, if you, I assume that meant were to pick and not financial advice, would you say higher sweep first or lower? So the way I typically treat the liquidity is the liquidity you are closer to, right? I explained this last night. If this is your liquidity and this is your price, the closer the liquidity price gets to liquidity, it's kind of like an actual magnet, right? The stronger that magnet becomes. So I never really look at this typically, like if I pull that month time frame up again, I would not necessarily say, all right, oh my God, there's more liquidity down here. We have to go down there first, right? Or, oh, there's more liquidity up here. We have to go there first. The way I use this is not to pick direction. It is to just have this as a trap on the chart, right? An area of interest. So, if I were to come down to that $61,000 liquidity first, I understand that if we come down here, I have an opportunity for a liquidity sweep setup, right? Meaning, essentially, in simple terms, a fake out, reclaim of the level, right? Stop out all the long positions. Massive move up. People are longing probably the top, putting their stop loss below the lows, and then all their stop losses go down here. That's the liquidity that we're talking about. When you hear me mention liquidity, I'm typically talking about stop losses. And then once you stop out these longs, that creates market sell pressure. And then that's what gives you those big wicks. And then if you can get the quick reclaim, the candle closure above, oftentimes what will happen is on that big drop to the downside, a lot of people do not understand that this is driven by stop losses getting triggered. They think it's a healthy dump, and they try to short the big move down, then putting a lot of liquidity in the opposite way, as we talked about here. It puts their stop losses above, so you can get back above, and then once you start pushing up, right, you start to stop out all those FOMO shorts down here, and it gives you a big pump to the upside. So the way I use the liquidity is simply just as an area of interest, right? So I have them on the chart. I'll just take the I'll just take this local one off just because this is the higher time frame, right? If we come up here, I know I have a liquidity sweep opportunity. If we come down here, I have a liquidity sweep opportunity. And I would say we're kind of in the middle of these two. So, the only way I would expect one to get hit first is if you're starting to creep really close towards, say, the upper liquidity, that's probably going to get taken first, right? It does act as a magnet for price, but in this case, I'm just viewing them as an area of interest. Let's see. Shout out to Leon, said the premium Discord was not boring at all in July. Yeah, I mean, at the end of the day, right, I always talk about, I mentioned this yesterday, essentially the entire month of July has been sideways, just chop, I guess you could say a slight trend to the upside. This is like the bread and butter of trading, right? So for something like the premium Discord, this is nice. We could have some really nice trades within the profile, longs, shorts, longs, shorts, longs, shorts. This is the bread and butter of making that active income from trading. But as far as like waiting for the big exciting move, for the exciting thumbnails, oh my God, this price is incoming. This is super, super trash price action in that manner. It's the kind of the beauty of being a trader is you don't need, a lot of people will say, oh my God, how are people still in crypto? It's down. It's like, yeah, you can make a ton of money on the way down. And as a matter of fact, when it goes sideways, you can make a ton of money. So, it's, and the other kind of side of that is, this is when people are saying that, it's like these are the same people that regret being, when Bitcoin eventually takes off. I'm not saying this is going to happen like this, but when Bitcoin eventually, people say that down here, when it's up here, they're going, oh man, I should have been paying attention down here. It's just classic psychology of the markets. All right, let's see here. What time we got? 2:10. All right, so we got 20 minutes before the press conference or the snooze fest starts. The market just trashes around, taking out everybody indiscriminately. Yeah, the market does not care about your feelings or biases. That is for dang sure. Shout out to Gen Z. Welcome in. He says, afternoon, everyone. My long got stopped, but took a TP. Let's go. Handshake emoji. I love it, brother. Nice doing business with you. You thought you won market, but you didn't. I still made money. I love it. Up or down is preferred. Yeah. I would agree with that, right? Like, it's nice if you actually have some massive volatility, but at the end of the day, even like small ranges, right? Like, oh my God, right? Plenty of money to be made on these moves. Even the long I'm in right now, what was this percentage? Right, 3%, not super volatile when you're looking at like a 4-hour time frame, just looks like super amount of chop, but of course, plenty of money to be made there. Nobody likes micro scalping tiny ranges. Yeah, I prefer like, this range is fine. I'm not a, micro scalping is, it's very stressful. It's very, you have to stare at the chart constantly. I'm not in the camp of, preferring to trade a little range like this. That is for dang sure. Gotta set bets on how many times Warsh mentions task force. Yeah. I bet you it's going to be a minimum of 3 times. That's my bet, guys. That's my bet. That was insane last time. I mean, it was like a parody. He was like, well, I just want to take it back to the task forces, the task force for task force. Yeah, it's just the task force are really just doing task force things. The task force is just, they're task forcing. I mean, it was insane. It's almost like he had a bet on Polymarket, or someone he knew had a bet on Polymarket, and he's like, I got you, bro. Don't worry. We're about to be rich. Micro scalping is playing Call of Duty. Yeah, just come out with bandages and missing limbs. Yeah, it is insane. The other thing about micro scalping, guys, is like, scalping, I mean, it depends. I mean, everybody trades a different style, but, it does partially take away the freedom that trading gives you, right? If you're glued to the screen 12 hours a day or 8 hours a day, 5 hours a day, whatever it is, if you're glued to the screen all day, right? It's like, one of the big things people love about trading is one of the things that attracts people to trading is that it offers a ton of freedom. And you're kind of just cutting your freedom right there, because people think that you're just going to get on the chart for 5 minutes, click buy, sell, buy, sell, buy, sell, make $1 million, and then you can just go to the beach for the rest of the day. In reality, it doesn't always play out like that. I have a task for us to see how many times he says task force. We were dropping rates today. Shout out to Gen Z. There was no change, unfortunately. Well, I guess not unfortunately, but of course, does probably limit the volatility a little bit. Shout out to Simonella. Sorry, I missed that super chat. Thank you. Says, am I wrong? Did we see a bearish confirmation on the 15-minute? Depends on, you did get a little 15-minute bearish divergence here. I mean, listen, bear divs, guys, are like some of the simplest confirmations you can look for. There's your bear div, right? We didn't really come into a key level here, but whether this is an area of interest I'm looking at for a trade, typically when you see these bearish divergences, chances are you're going to get some kind of push to the downside. Obviously, you got a nice little, what was that? Yeah, a nice little almost 2% drop to the downside. That is a 15-minute bearish divergence, so you're absolutely correct on that. Doesn't mean I'm necessarily looking to trade that, because when you pull up our key levels, right, not really. I mean, I guess you're above the PLC of the range, but there was really nothing necessarily super interesting there, unless, let me see something. Yeah, there was nothing really there that I would have been interested in trading, right? Again, my thought process for my long position here is let's see if we can fill the volume profile in full. Maybe FOMC steps on that. On a normal trading day, right, you are expecting to get above the PLC, flip the PLC, go to the value area high. Still not over just yet. Here comes the volatility, guys. There's the famous FOMC wick. What do we got here? Another few more minutes left for the press conference. Yeah, with great freedom comes great responsibility. That is right. With great volume profiles comes great responsibility. I'm taking a shot every time he says task force. Shout out to Mrs. Alifin. I don't know if I said that right. Don't drive today. If you could do me a favor, please don't drive today. I have a feeling you're not going to be capable. I just have the BTC chart open on my secondary monitor and buy whenever BTC dumps into a buy zone. Easy to glance over and instantly see an impulse. Shout out to V-Troll. I think I missed. When does the press conference start? And we just moon. Is that how it works? Shout out to AR Perez. I wouldn't say that we just mooned. That's typically where you'll see kind of the volatility start to pick up sometimes, right? I mean, recently it hasn't really been too crazy. Think we might fill the volume profile to the value area high. Yeah, and like this is the perfect thing, right? Like I said this yesterday, right? Like I don't jump on the chart, right? Like today, for instance, right? I'm not jumping on this chart going, okay, do I long or short, right? I have my areas of interest, right? I already have my long position from the low. I know. I believe we have a daily MPOC up here as well. That was my area of interest for the long yesterday. We took it, playing out very nicely. If we fill the value area high, shocker, another beautiful volume profile rotation. And then when we get to the value area high, we could potentially look for another rejection. I'll at least be looking to take some more profit on my long. Let me take a look at these lower time frames real quick on Market Cipher. Whoops. So yeah, 1 hour money flow crossover into the red. We don't have a 16-hour red dot just yet. Daily green dot looking to print. Just checking any kind of major signals or setups that we have here on Market Cipher. Yeah, may have a 4-hour. Oh, man, it's choppy on the 15-minute. You're in the red, in the green, in the red, in the green. But you got a 4-hour red dot. If that ends up printing, that could give us the pullback. We'll see. It's not printing just yet, but that's really the only thing that's getting close as far as a significant time frame. Yeah, 2-hour green dot. 3-hour green dot, man. So choppy. It is so representative of this choppy price action, guys. Market Cipher just absolutely wonking around. Basically, every word he says is going to swing the market until it digests everything. Yeah. It's really what FOMC is. I always tell people, if you're new to trading FOMC is very dangerous, right? Because, of course, if you don't understand the advanced concepts of liquidity and kind of like how price action typically behaves on an FOMC day, it's a high-impact news. It's very dangerous, right? Like a lot of new traders will be like, oh my God, we're pumping. And they don't understand it's FOMC, and it could very quickly just be a liquidity sweep for a massive dump back to the downside. So I recommend, if you are new at trading, maybe today's not a bad day to kind of just sit on your hands and watch the craziness and not risk anything. Bear or bull moon print? I do not know the moon phases. Somebody will tell us in the chat. We got a bull moon or a bear moon. I don't know which one's. I think a full moon is bullish, or no, new moon is bullish, I think. All right, got some Aztecian cactus. Ice cold water here. Oh my God. Brain freeze. We also have an MPOC at 65,305. Potentially, I don't have an MPOC there. Doesn't mean that you don't. You might be pulling it from a different place, unless I don't have it marked off on the chart. Oh, actually. Yeah, I don't have one there. Doesn't mean that you don't. You might be pulling it from a different place. Let me just check Exo charts here real quick. Yeah, I do not have one at 65.3, but again, doesn't mean that yours is not there. You might just be pulling it from a different place. Yeah, shout out to Maybe a Band-Aid. Thank you for the super chat. Said, hashtag not my inhaler. I don't know what you're talking about, bro. I don't use an inhaler. I don't wear glasses because I'm not a nerd. Don't investigate that, guys. Don't investigate that. Anyway, shout out to Maybe a Band-Aid. Good to see you in here, brother. How about ETH? We did take a look at ETH in the beginning of the stream. So yeah, again, key level on ETH. 1834, lose that. I'm looking down towards this zone at about 1800 to 1734. Major level of support for Ethereum. We really do not want to lose this anchored VWAP. I would say the biggest major level you don't want to lose is going to be the anchored VWAP and the POC of the range, right? Because if we lose this area of value, might just be a retest. Hopefully we could hold on top of it to get back in and continue up. But if not, right, and we end up losing the anchored VWAP, losing the anchored VWAP, which is okay to slip it slightly. But if we start losing the POC, can't get back above, I will be looking for a much bigger drop down, probably towards the value area low, sitting at about 1613. So absolutely 100%, this is the level to be watching on Ethereum. 1800, call it 1800 to 1737. Let's see here. I wear glasses. I'm a nerd. Shout out to Sean. Yeah, I was joking too. I'm supposed to wear glasses. Mrs. Candles got me glasses. She talked me into buying these expensive glasses with transitional lenses, all this stuff. I never wear them. I used to have really good eyesight, but I don't know. She's like, you need glasses. You got to preserve your eyes. I'm like, I can see fine, man. I can see fine. The inhaler, though. The inhaler is yet to be proven. We're going to the moon. Shout out to, yeah, I hope so. That'd be nice. Oh, don't forget the video meme. What do we got? All right, we got 10 minutes, guys. I'll play the it's Powell. I gotta change it to Warsh. But we'll do it as honor to Jay Powell. Yeah, we'll play it. It's the most epic video ever. Let me just get this all ready here. All right, let's get this current. Bada boom. Hopefully this doesn't blast in your ears. I don't know if it's muted yet. All right. So I got it here. And hopefully we don't have streaming issues. We've had a lot of streaming issues in the past. It's really for the big ones that we wind up sitting with a frozen live stream. We have to keep going back and forth between YouTube and all these different places. Shout out to Oprah. Welcome in. Say, what up, Franco? What's going on, Oprah? All right. Let's pull Bitcoin back up here real quick. Attempting to lose the POC here. Just kind of playing around. Remember, this is the strongest magnet within the profile. It's not uncommon to see price play with that POC, right? Oh my God, we're gonna regain it. Oh wait, no, we're losing it. Oh my God, never mind, we're losing it. Oh my God, we're regaining it. So we'll see, right? We could kind of just magnetize to this. Let me check the super lower time frames here on the liquidity. Let me check like the 3-day real quick. Maybe give us something to look at before waiting for those. In the meantime, while we wait for those bigger key levels. Yeah, that's still sitting up there, 65.7. Yeah, I mean, I feel pretty good with my areas of interest. Yeah, very simply put. I mean, for me personally, alert, 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 right? I have all my areas ready. And, I'm not always looking to pull the trigger on a trade. You want to take the highest probability opportunities, right? I'm not interested in longing right here. Why? Because I have not hit my key level, right? And sure enough, oh my God, I missed the long. Boop. Never mind. To the value area low, bullish divergences. Now I'll take the long. Swipe it to the upside. Whoops. Might have to pull up the 1-second chart today, guys, if it gets super boring. Look at this price action, man. Typical FOMC wonk, I like to call it. We're honoring the most honorable man, JP. Shout out to Gen Z. On the macro perspectives, do you think it's still possible that we don't go below 57K and just make a higher low at 60K? Yeah, shout out to ChemDog, bro. Welcome in. Yeah, I actually just covered that in the beginning of the stream. Definitely still in the cards. Why do I say that, right? Again, this does not mean it's guaranteed, right? If you're looking for guarantees on the chart, not that I think you're looking for that, ChemDog, but, if anybody's out there, I want to know exactly, I don't know, 100% sure if it's going to break these lows, right? Trading is probably not the thing for you, right? There's no guarantee. There's one thing I've learned through my career investing, trading, is there is no 100% certainties, right? And that's why I approach trading the way I do, which is finding the bullish case, the bearish case, and then looking at the TA to figure out what the highest probability is. Not the guarantee certainty, but the highest probability. I bet on the highest probability, and over time, that plays out more often than not, as long as you're doing the TA correctly, which of course we do. So from a just basic perspective here, yes, I mean, technically, our 1-hour money flow is still crossing into the green. We do have room, right? If you want to say, oh, I don't like indicators, that's totally fine. I would never bet on an indicator alone. But you also have room to come down here. If we come down to, say, $60,000, is that still potentially a higher low? Yes. Could that potentially still end in a higher high? Yes. Right now, what I will say is it's going to depend on what money flow looks like when we get down here. We have to wait for the level to get hit. This is not a place where I just have limit order set to take a long, right? If the charts look like trash down here, I can then say to myself, I have new information on the chart. It doesn't look good. There is a low probability chance that we get a bounce here. In that case, I may not want to take the long position. But from a structural perspective, from a money flow perspective, this does still look like, we do still have the bullish divergences, which are not going anywhere. They're locked in. And the money flow is still technically trending to the upside. We also have our VWAP coming up here, right? So if we don't get some kind of massive dump, money flow fakes out. Once we get that green dot on the daily, you have a good chance of that money flow continuing to cook into the green, which would keep the open door if we come down to 60K for a higher low and a higher high. So yeah, I would still say there is a possibility there. Money flow, structure is all pointing towards that. Now, what is the invalidation for that? Well, it would be, number one, we could probably catch it early by understanding that if there's no signals down here, chart looks like trash down here, probably not going to hold. But at the end of the day, the very clear line in the sand is lose the golden pocket. I personally start to lose faith in it. But at the end of the day, technically the line in the sand is the 786 sitting at 59,667. All right, once we lose that, higher low is invalidated, and I would generally be looking for a sweep of macro lows. So we'll see. And again, I talked to you guys about like kind of the psychological perspective here as well. Everybody wants 30K. Typically, not 100%, typically when the masses are calling for a major number, it doesn't get hit. It doesn't mean you can't take the lows, right? But it would, in my opinion, cause the most pain. Like this thesis would make sense to me. If we end up eventually getting up in here and filling that volume profile, this would be extremely painful, in my opinion, more painful than moving to the downside. It's like the opposite of the top. You have everybody calling for major new highs. We see all the bearish confirmations. I'm sure other people saw it as well. I'm not saying we're the only people. But we saw the major bearish confirmations, looking for the bear market to come in. Everyone else is calling for higher, calling for higher, calling for higher, calling for higher. They don't get it. Same thing happens at the bottom. Down here, 8K, 10K, 12K. Right? You could have those targets, but once you see those confirmations, it's less likely for them to get hit. So it's the same thing down here. That's why I say, you might say like, oh, price goes up. How could that be more painful? Well, you have a lot of people, right? People get greedy on the way down just like they do on the way up. A lot of people are going to say, I don't want to buy here because what if it goes lower? I'll make more if I don't buy here and wait for lower, right? But what if lower does not come? Right, and this could happen at any level, right? It doesn't mean the bottom's necessarily in. But they're all going to be greedy, waiting for lower, right? And that's why I say if we come up here and start filling this will be a very hated rally. And the market likes to cause as much pain as possible. You'd have a very clean fill of this volume profile. The TA would make sense. And then once again, the masses would be on the wrong side of things. Now, the masses are not wrong 100% of the time. That's why I'm saying this isn't guaranteed. But it would just make a lot of sense to me, right? When I start to look at this and I'm like, that would make a lot of sense. Everyone would hate this run. If everyone was waiting for lower. In hindsight, you'd be saying, well, yeah, it makes a lot of sense that all those people are upset. Most people got wrecked. The masses were wrong once again. Again, not betting on that thesis, but I'm not betting on that specific thing of the masses being wrong. I don't trade based off of that, but it would make sense, right? Shout out to Vitrol. Oh, he's talking to Linden. Let's see how much time we got left. Oh, baby, we got 1 minute. I got it open here. I will see him pop up. All right. I guess let's let's run it, guys. Let's run the live stream. I'll see you in 2 seconds. Shout out to Jay Powell. We salute you, bro. Oh, I'm going to have to try to find another deepfake with, maybe I could probably make it at this point in the age of AI. I could make it myself. We'll have to make one with Warsh. I almost called him Jay Warsh. That's what I'm going to call him. I'm calling him Jay Warsh. Shout out to Prindle says, locked in like the like button. I love it. Shout out to Jesse. Thank you for the super chat. Said, I would like to advise to hit the like button if you want to pay your respects to Jay Powell, somebody's grandpa. Smash that like button. There will always be another JP. JP was so boring. I know. Shout out to Andrew. Yeah, he wasn't the most exciting man in the world. I've fallen asleep many a times to his poetry. Tesla Bot is a good dancer. Yeah. Warsh at least has some charisma. Yeah, I mean, he's very charismatic when he's talking about the task forces. JP the GOAT. I always felt bad for him, man. That's somebody's grandpa. Everyone's just ripping him apart constantly. It's you got to feel bad. Here he is. All right, here we go, guys. Here we go.
To maintain the target
Oh, God.
range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal.
Can you guys hear?
And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%.
Thank you, Jesse.
This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
All right. God. Imagine, like, having to do this.
Thank you for taking
Sitting
our
in
questions,
this room.
Mr. Chairman.
Yes, Dave, I will wear a
You've
suit
had
on the next
couple
thumbnail. It's a great
months
idea.
now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8
Just going to
weeks
hop back and
4
forth
days.
between him and the charts.
I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
You're right. That tie is a little bit sloppy.
I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly, but the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool
Dave,
CPI?
you're
print
crazy,
for
bro.
June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
That's it. Will we win our bet?
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Oh, boy. So he said it twice.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a three-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So
Oh, boy.
that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference,
Task
to
force.
ensure that we get there, is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big, hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction. And nominal and real rates went up. Did
We need the blue
Fed
chew.
take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Did Zuck ask a question yet? Mark
Nick
Zuckerberg
Demarest,
is always
Wall
here.
Street Journal. Chairman Warsh, I want to follow up on
that him?
Colby's question.
There he is.
About policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation
Look how
down
tight
by
his
cooling
tie is.
demand.
That's beautiful.
It's generally
Warsh
thought
is
that
his
can help
trash.
in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back
crooked.
to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI It's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I
Dude,
could
this
ask,
guy
where
is such a
exactly
politician.
Was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Dude, there's something about his speech cadence that is like very Obama. I feel like he studies
Janelle Marti with
Obama
Bloomberg.
to learn how to public
Following
speak.
up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Very Obama. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
Bro, he sounds like
Some
Obama.
of your
He's
peers have
speaking like
continued
Obama.
to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. And what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, where in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Bro, Obama with no swag. Yo, you guys are killing me right now. Dave is just roasted right now.
When you talk about the 2% inflation target, what measure
Got to get above this
are
786.
you relying on?
Potential blue chew
So
activation.
I'll
up
give two
here.
answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows, come after next January, what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today.
Call
and
them
maybe
out.
you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah.
Ooh, bringing the heat.
Believe
Let's
it or
go.
not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it. But I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business.
They're going to ban them.
And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well. and
Projecting
ask
the 786
what vetting
here.
did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent,
We're at 11?
depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have
Sir,
no tolerance
we don't know what you're talking
for
about.
inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling
What is this
commentary.
guy taking a picture of?
I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys. But if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight. And eager
What's with the
to
family fight, dude?
reform the way in which the Fed does policy. A keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on
It's
the
Obama,
remit
bro.
that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Thank God. God, he is a politician, man. A lot of nothing, guys. Again, a lot of nothing. Chart just still where it was before. Little volatility. We got the blue chew activation up here on the liquidity. We also have some liquidity sitting down here hyper locally. Wow. That was painful. That was painful. You guys are killing me in the chat with the comments, bro. Dave, Dave, bro, I was losing it for a second. It's like, this girl's not even hot. Bro. Yeah, dude, that is typical FOMC, guys. Just pretty much, let's see the 4-hour candle. There it is. Look at that. Up, down, in the middle. So, yeah, super brutal, guys. I don't know what the task force counter got to. I think it was above 10. So I lost. I was expecting at least 3. I figured he would tone it down a little bit since the last meeting. What did you guys think about that? Whole lot of nothing. He's definitely studied Obama to learn public speaking. He has the same mannerisms, the same cadence. Very interesting. It's almost, you can't unsee it once you see it. Very weird. I miss Jerome. Yeah, everybody. I said that on the last meeting. I said at some point people are going to be like, I miss Jerome. Yeah, I miss Grandpa JP too. Nothing to spook the markets. I presume we going up. Yeah. Well, from a technical perspective, I would say, yeah, I mean, higher time frame still remaining exactly the same here. With the money flow on the daily, I will, let me just go ahead and hide these Blue Chew. Somebody asked what Blue Chew was. Blue Chew is a men's performance enhancement pill. And sometimes when Biddy touches the Blue Chew, she skyrockets, unless the Blue Chew is to the downside. But anyway, yeah, I mean, technically, guys, this does not change anything. We are basically just bing-bonging around inside the profile, and this just kind of goes to show sometimes it's fun to watch the FOMCs if you get a lot of volatility. From our perspective as traders, we get that volatility. It's tradable. Recently, it's been kind of trash, but it just goes to show, guys, like everyone paying attention to all this. Oh, my God, all this like word vomit of political vocabulary, and it's just like, pay attention to the volume profile, right? Like this is, it deletes all of that noise. You know, all we're waiting for is maybe that, you know, one of the, some of that word vomit could have pushed us into an area of interest to take a trade. But other than that, right, just sitting here doing nothing. You got everybody and their grandma trying to trade these crazy wonked out moves. But yeah, I was hoping we were going to come down to hit a key level, liquidate some people, something like that. I mean, not really too much here. Within the volume profile, you would still technically anticipate an eventual fill of this. Doesn't mean it's guaranteed, but I will still say liquidity leading into the value area high, golden pocket 786. So for me, this doesn't really change anything. We hadn't come down to hit any of the key levels. We do have a 15-minute red dot about to print. That probably will pull us back a little bit. But right now, you know, key level to hold is going to be that POC at 64,105, right? Might kind of just bing bong around here. Once we're able to hold on top of it, next major level becomes here. I'm not really interested in anything locally, even as far as scalps, until we get up here or down here. The one thing I will bring up, guys, we talked yesterday about how we do have, obviously, the golden pocket 786 up here, which could eventually be a place to look for a lower high before another lower low comes in. We are currently rejecting our local golden pocket 786, pulled from the high to the low. So could the lower high be in, and we just fake out this profile and dip back down? Definitely possible for me. My long from the low has not invalidated. Got the profits locked in, so my simple next day profit's going to be the value area high. I will be patient until we either get that or I stop out in profit. Let's see. Shout out to Super Sammy. Thank you for the super chat. Said, call Big T, pump it to 68K. Somebody pump it somewhere or dump it somewhere at this point, guys. I don't really mind either direction. I just want to move. I personally like how this guy's whole thing is not wanting to influence the market with the stroke of a pen or the utterance of a few words. Volatility, nice though. I agree. Yeah, shout out to Brillo. It really is insane, man. I mean, these press conferences, even with Jay Powell, it's just all total word vomit. It's just, yeah. And like to me, right, we live stream these to watch the charts and see the volatility because obviously we can get the big moves. But for me, honestly, you know, I pay attention to what they say, but I am not a macroeconomist. Like for me, whatever they say, whatever's going to happen is oftentimes on the chart. We're positioned for it anyway. You know, there are people, right, that can trade news or trade sentiment. There are ways to legitimately do that by doing like legitimate like social analysis, all this stuff. But for me, the charts are the cleanest way to look at it, right? It deletes all the noise, right? Oh my God, you're gonna miss bad news. That's okay, right? The bearish signs are typically on the chart. Anytime we ever get bad news, we're already in the trade based on the technical indicators, and you know, you don't have to worry about all the I'm trying to decode what they're gonna say. And like I felt bad almost for like the people who are trying to figure out what all this means, and you know, at least from a trading perspective, right? Obviously, it's important. I'm not saying it's all BS, but you know, it's just like, thank God. You know, if I had to, you know, pay attention to all this and analyze what they're saying and try to decode it, right, I probably would not be a trader, right? The fact that we could just pay attention to the charts, you know, show me the charts, I'll tell you the news. Show me the charts, I'll tell you the narrative. It's a beautiful thing, right? So if any of that confuses you and it's something that bores you to death. Me personally, guys, I fall asleep during that stuff. I feel like I'm back in school, which I hated. If you want to be a trader, you don't necessarily have to pay that much attention to all that stuff, right? You want to understand how rates work, if they're going to raise them, if they're going to lower them. But honestly, at the end of the day, we could have seen that the expectation was that they were going to pause. We could have skipped all of that nonsense political speak, watch him talk like Obama, and just continue to react off the charts. I find that very, very not comforting, but very nice. It's just like, I don't know, man. Reminds me of 1010 when you were already shorting BTC. Yeah, shout out to Manuel. I mean, a lot of people will say, and again, it would be stupid for me to say that none of this matters, right? Obviously, it matters. I'm not an idiot, but it is true, right? It's like, well, what if Trump tweets and sends out a bearish tweet? Market's going to dump. Yes, and I actually always point to that example of October 10th. Right? We simply, right, just kind of decode this. Oh my God, Trump tweeted massive dump. We were simply short based off simple bearish divergences, money flow coming out on a deviation above the value area. This is where I look for shorts. I see the confirmations, I take the trade. We dip back into the profile, then, right, we're already in profit, then Trump tweets, gives us the drop down, price settles right at the value area low. I don't care if Trump tweeted, right? It's usually on the right side. It's already in the charts. So it's like, and everybody chasing this, right? You're usually too late to the move, and then you get stopped out. So yeah, it's like nice. I always find it funny when people are like, oh my God, but this bill and this act, it's going to pass by this day. And I'm just like, dude, man, I feel bad, right? It's like, I've been doing this for like the better half of a decade. And it's like, it's, this is definitely the better way to do it, in my opinion, right? Maybe not for everybody. There's people out there that make money doing other things, of course. But, it's, it's crazy. It's crazy. I had a math teacher with a very nice monotone voice that literally put me to sleep after speaking for a few minutes. Shout out to Dave Digital. Shout out to Jose. Dave says, I prefer my Fed chair with more personality. Yeah, I would say maybe he's a little bit more charismatic than Jay Powell. But, it is. Does anybody else notice? I saw someone else said they were thinking the same thing. Does he not speak in the exact cadence of Obama? Even the hand motions are almost identical to Obama. Very interesting. Honestly, I don't think it would be a very low chance that he studied Obama to learn how to public speak, well. Very interesting. Nothing happened. It's dumb. Shout out to Rudy. Yeah. How did we not take those highs? I don't know, man. This is we like squeaked them by barely ain't nothing. But yeah, even if we were not playing that press conference, right, we would have just sat here. Same situation. No way. Powell had way more personality. Shout out to Dave. My short survived. Price got $5 within my stop loss. Shout out to Indy Martini. Woo! Man. Jay Powell from the Jersey Shore. As far as we know, he really do love inside fighting. Yep. So maybe we'll have to bet on family fight. Maybe we'll have to bet on the term family fight next time. I don't know what we ended up with. I think we ended up with like dang near over 10 or 11 task forces. Wish we could bet on it. So where are we headed, Frankie? Up or down? Shout out to Rudy. I will tell you my overall plan. Again, high time frame bias remains exactly the same. Not unfortunately, but it's just like no update, right? Like high time frame, my exact plan remains exactly the same. Pull up the overall range. Biggest key level of support, 61,000. 61K at the golden pocket value area low. Line in the sand, 59.6 at the 786. I do still think, right, looking at our money flow here on the 4 hour, we saw this coming out yesterday. I do still think this could potentially indicate that, is this going to be the higher low before coming up to take out the 68K highs? I am still very suspicious of that not being the case. And finally coming down to see this volume profile fill in full. We're still fighting at the POC. We've approached from the high to the POC. Can't get out. Now we're losing the POC. The next magnet within the profile is the value area low, right? We have all the liquidity below here, and massive liquidity down here. So it would make sense for me, to see price come down and fill this volume profile from a profile perspective, from a liquidity perspective. And like, honestly, if we continue down here, sweep out that liquidity, sweep out this liquidity, right? It's just kind of like a cascade of liquidations, which would push us right into major support. So we'll see what happens. Lower time frame, like daily time frame, money flow still coming up. Higher medium time frame, 4 hours, still super, super wonky. Just really waiting for a key level to get hit here with all these mixed signals. 3 hour money flow in the red, trying to come back up. 2 hour money flow in the green. Like, you could see the mixed signals here. 4 hour, I would say generally trending out. 3 hour is in the red but curving up. 2 hour is just in the green. 1 hour crossing into the red. Just total absolute wonkiness. But I will say, again, the two major areas to put in lower highs here is, of course, going to be our fibs pulled from the lower high to the low, and our full fib sitting up there at the value area high. So very simply, could this be the lower high before coming out, taking out the low? Absolutely. It's hard for me to say we have every time frame pointing towards that. You have the 1 hour pointing towards that. Maybe the 80-minute pointing towards that. It's just the money flow super chopped up from a structural perspective. If we're going to look for a lower high before seeing the lower low, this golden pocket rejection or the value area high 786 rejection is going to be the place to look. So we'll see. We'll see what happens. I'm just going to hold the rest of my long position that I have. If I stop out, I'll stop out in profit and then just wait for those next key levels. And if we get the push up, I'll take more profit up here and then potentially look for a short. Mixed signals. I feel like I'm on a bad Tinder date. Yeah. Tell me what you want. Yeah, nuke it to zero. We just lost the POC. I mean, this is the key level to reclaim, right? If we can't reclaim this, right, there's no reason to look for the value area high, especially because we're approaching from the high of the range, right? Statistically speaking, and I know it's hard to look at this after we've seen, value area high tap, no full rotation, value area high top, no full rotation. At this point, we've had the deviation, acceptance into the range. The overall rotation expectation off the volume profile is this. The only reason I am, still open to getting another rotation or another little bit of a push up, again, is really just because money flow is just so mixed up, right? Your 2 hour money flow would be having you think, right? Money flow in the green, right? Maybe see the trend continue up a little bit more. But again, right, your lower high is either going to come in here or here. Shout out to the premium Discord. We had our short setup from the acceptance into the range right here. Short at the value area high. We hit the POC for a TP1. At this point, stop loss at break even. The low would be the next major target. It's a simple value area trade. We just don't have all the money flow pointing in the right direction to make it very, very clear that is going to be the route. But, if you're just trading volume profile, some people don't even look at money flow. If I were just trading the volume profile here, I'd have to say the statistical higher probability is to see the value area low tapped. So the question is, do we have to go up for one more sweeper, or are we just going to put in the lower high here? TLDR created a special task force, different views within Fed board. They want the new task force to have inside fighting too. Shout out to Dabs. And somebody said his tie was crooked because the scuffles that he was getting into on the way up to the stage. No, don't you dare do that. They're grabbing him by the tie. Yep, I'm the boss. Yeah, shout out to India Martini. No, we need Frankie to take a shot every time he mentions the task force. That would be brutal. That'd be fun. That would be really fun. I would probably have to get off the live stream very quickly before things got out of hand. But I for sure would not be able to walk after that live stream. J-Pow is at Applebee's bar with a $90 tab right now. Yeah, you think he's upset? You have to think he's probably so relieved that he's not doing this anymore. I mean, he just got roasted constantly. Let's see. Stop shorting everyone. Go long so the price can finally go down. He's a nervous but smart guy. Warsh talks so much that you'd forget your question. Yeah. I like that one guy. That one guy really put the heat on. He's like, hang on, man. Cut the BS here. I'm having trouble understanding what you're even saying because I don't think you're speaking English. And then the other guy was basically like, why are we here? Insane. He's probably laughing. Yeah, he's like, poor guy. I feel your pain. Yeah, he didn't mention Task Force as much as the last one. That's why I bet on 3 times. I figured he would cool it down a little bit. 42K incoming. Yeah, probably no stream at 5:45. Yeah. I mean, unless we get some kind of crazy move, I just feel like it'd be super repetitive to just go live again in an hour or so. Shout out to Gordon said, what percentage up do you decide to take profit on long-term holds and then start reinvesting over? Shout out to Gordon. It's not really necessarily a percentage thing for me. It's more of a key level thing for me, right? So in the previous, I assume you mean for like long-term spot holdings and like within the larger high time frame cycle. For me, like we had major key Fibonacci extension targets here. And these were the targets I was looking at. This was target number 1. This is the first time that I took a little bit of profit on my spot Bitcoin bags. And then the second target was sitting between about 137 and 156K. We did also have local targets after we saw the development of the price action here around 124K. I wound up selling the rest of my long-term bags on this little retracement here around like 110K. So it's more about a key level thing for me, right? It's not just like, not that it's bad. Like if you double your bag, if that's, you want to take the profit, there's nothing wrong with that. But it's more of like, why wouldn't I take profit here? Is it wrong to take profit here? Well, if you bought down here like I did, right? That's not a bad decision. But understanding the cycles and where we're likely to go, I don't want to take profit too early either. So I wait for those next key targets to get hit, right? This Golden Pocket 786, although a key level of resistance, is also the doorway, once flipped into support, to really see those new all-time highs come in. And then that was kind of the first big level. Then we had the second big level up here. We wound up not hitting that, so I got out on the retracement. And then, of course, into the bear market we went. So, yeah, it's not really a percentage thing for me. It's more of a target thing for me. Let's see. Shout out to Pab, said I just did $150,000 on Tesla puts. Too bad it's a paper trade. It's all right. Hey, it's practice. It's practice. All right. So, yeah, continuing to move down here. We also do have a significant amount of liquidity. I was looking here at during the live stream at the, where is it at? The local liquidity. And we do have it. I'll mark it off here on the chart. We do have a significant amount of liquidity. About 63.6 down to about 63.2. Yeah, wow. I mean, it's a pretty big amount of liquidity down there. So this is what I was marking off during the live stream if you saw it. We do have a bunch of liquidity down here as well. Equal lows. We come down there and sweep. Could be a... let me pull up the local range real quick. Yeah, I mean, at the end of the day, even zooming in that much, it's like you're just still within the local profile. So I talked about the medium time frame profile, which is obviously, big line in the sand on the high time frames. But our local, who knows? We might just kind of chop around here. Locally, I'll give you this volume profile to watch. Value area high 65.2, POC 64.1. Value area low 62.686, and then we also have a daily down here. Take that off. And a shout out to somebody said there was an MPOC. I thought they said 65.3. I think they may have said 63.5, which is the case. We do have another daily MPOC right here at about 63.435. Is it? I think it might be 345. Hang on. Oh, actually, you know what? I'm going to take this off. This is pulled from the wrong time frame. I'm actually going to take that off. So, yeah, I mean, this is your local range. I am a volume profile trader, essentially a range trader. Shorts, longs. And then, of course, medium time frame, right? Like this long, am I going to be surprised if this just winds up being a lower high and eventually filling the overall profile? Probably not. But again, I would be looking at this as more of a scalp. I would look at something down here as more of a scalp in the eventual outcome of pushing down towards about $61,000. I mean, this is the big target within the profile. We know these profiles have a high probability of filling. And as I mentioned last week, although we came to the high, didn't fill, came to the high, didn't fill, right? We've now gotten the deviation. And of course, as we talked about last week, I do think we're going to see the outcome of either whether this is the full rotation or this is going to be the high or low for the breakout. Like, I think we're going to get the outcome here. I don't know how much longer we can really chop around. But one thing I will say is if we do give a little bit of a, yeah, never mind. Really just trying to find something. But I think the moral of the story here is, guys, is we are just stuck inside chop. I like to give you guys my key levels I'm looking at for trades. But, yeah, like within here, I'm just not interested in playing with this. I just want key level. These are lower time frame levels I'm looking at. And then on the higher time frames, similar to the upside, right? Key level. And then down here, massive key level. So it's all about having the alert set. You can see I have them set here. I have it set here. I have it set here. So just waiting for one of these to get hit and then holding my other trades, letting them continue to pay me out and taking profit at the targets. Let's see. Shout out to Chris, said, does Frankie trade a year of premium for a year supply of barbecue sauce? Shout out to Chris. I want to be clear. I don't not like barbecue sauce, but it's not my go-to sauce. We actually did have a CandleMafia member that had a hot sauce company. Shout out to Carrie Stressel, I think her name was, or his name. I'm not 100% sure. But they sent us some hot sauce. It was amazing. But they didn't ask for a free year of premium. I probably would have given it to them. Currently, shout out to Dab, said currently looking at the $64,000 level. Looks like it's being protected by buyers. Yeah, I mean, POC. Yeah, shout out to Gen Z, said trading is so boring when you're making money. Yeah, I mean, I always tell people, like, do you want to just, like, not be bored or do you want to make money, right? It's like more often than not, like, in the times where some of my best trades are trades that I, number one, have to sit on my hands for a very long time until the key level gets hit. Like, this isn't one of my best trades, but the long here from 58K, we've been waiting for that level for so long, like so long. I talked about it forever and ever and ever and ever and ever, and then finally it happens, right? And, like, as you're pushing up, people are like, oh, my God, you know, I assume people are thinking, like, oh, like, who cares about this level? It's so far away. But you have to be ready for that and patient for that. And, of course, we took trades in the meantime. But, you know, this was a major, major, major level. And once you get down there, sure enough, you tap the key level with beautiful confirmation, and then, boom, the trade plays out. This isn't, like, this long position isn't something that, like, you're clicking buy, clicking sell, and it's an active, like, it's not something that's, like, super exciting, right? Like, you take the long, you take your profit at your key levels, and then other than that, once you take your profit, have your stop loss set at break even, it's like you're just waiting for the rest of it to play out or stop you out. And, yeah, I think that's one of the common misconceptions. People just want to get on the 1 minute chart and click buy and sell 15 times in the first 30 minutes of market open. And, you know, more often than not, I can probably say, honestly, like, statistically speaking, you are much more likely to lose your money that way rather than, you know, trading is a game of trapping. I'm not going to give you the setups, right? But I will give you the key levels. All right, we talk more about the exact setups and the confirmations that I'm looking at. You could follow along with all the trades that I take in the premium. But then on the YouTube live streams, the free live streams, right, I share with you the key levels, right? Very simply put, like, get me out of bed when we come up here or come down here. Very simple. And then, of course, locally, right, those are for, like, the bigger macro levels. And then locally, wake me up. I mean, this is the same level. Wake me up if we get down here. Maybe I'll take a little scalp. All right, while I'm waiting for those bigger levels, of course, we have the short from here and the long from here. So we're still making money. I personally didn't take this trade because I wasn't on the charts, but it was in the Discord, right? So we're making money, right? Just trying to get that daily, you know, active income while waiting for the bigger levels for the swings. But other than that, like even on the local levels, it's like if we chop around here for 2 days, right? I'm not interested. Like let's just, for instance, assume price just goes sideways here, right? Like I'm not necessarily interested in catching these moves, right? Like I'd rather like do something better with my time and wait for the bigger key levels. And like I can give a perfect example of like down here at $58,000, right? Like, do I care if I miss this long position? Not really. Is it tradable? Sure, right? Like I don't care what's happening. Oh my God, I missed a long. Oh my God, I missed a short. Oh my God, I missed a long. Oh my God, I missed a short, right? Like I just like live my life, wait for my key level to get hit, then take the trade, and then boom, make way more money. With less wonky volatility, right? And you might ask yourself, well, what if we bounced here and it didn't go to your key level? That happens sometimes, right? But more often than not, it will hit that key level, which is no longer on the chart. It was about $58,000, right? It's just like, it's just a better way to trade, in my opinion. But to each his own, right? Different strokes for different folks. There are times where I take micro scalps. I'm in and out of the trade in 5 minutes. But it's still, even if I were trading the 1 minute time frame, right? Like I still need to hit a key level, right? I still need the setup to present itself. I'm never, you could be a momentum trader and just be like, okay, we're going down. I'm going to try to catch a short here. It's like, you could do that. But for me, like, you are going to, number one, save yourself from losing a lot of money. And number two, make a ton more money. I don't say this to say it. I say it because I have experience doing the other things. You are going to make way more money, or at least personally for me, I started making more money and I was saving myself from losing a lot of money when I finally said to myself, I don't need to be in a trade every single 5 seconds. I don't need to, not even be in a trade every 5 seconds, but click the button every 5 seconds. Ask yourself, are you taking a trade because you're bored and you're sitting on the chart and you want to take a trade? Well, that is the worst way to take a trade, because think of that sentence. I want to take a trade. The market does not care what you want, right? The way you want to do it is be reactive. Set the traps. Take the trades at the key levels. That's where you're going to get the highest probability of a massive move, right? I wouldn't necessarily consider this massive, but it's a lot more massive than, whatever 1 minute bing-bonging around is going on in this little 10-hour candle. Patience pays. But I think most people have to learn that the hard way. Most people are like, screw this, man. I'm going to take 5 trades today and make a bunch of money. But I promise you, if you do that, I try to save people. I try to expedite the Mafia's trading journeys and trading careers by helping you learn from my mistakes. And if I could help you skip, that was one of the longest periods of time for me, was just taking random trades because I didn't know what I was doing, right? I didn't have anybody telling me what I should be doing. And I was just stuck there hitting my head against the wall, and I just couldn't figure out what was going wrong. And then I had to learn all this the long way, right? And hopefully if I could help you guys understand that from learning from my experience, you could just skip that whole step. I wish I could go back and skip that whole step. I would have been making money way, way sooner. But yeah, momentum too risky. It's like, all right, it's like you can wait until you get super close to this low and then say, all right, I'm going to short here and then see if we could take out those lows. I'm a genius. Oh my God. And it's like you get a 0.1% move unless you're trading with a gigantic position size. You're not going to make that much money, right? You're going to have to pay a ton of fees. It's, and again, you have to sit there and like stress it, right? It's, it's nothing better than, finding a setup. This is not the exact case down here, but it's like oftentimes I'll come down to the key level. I will take the long position, right? And then, I go out to eat. And then all of a sudden it's like, oh, the market's doing what I thought and I'm out to eat and I just made $5,000. That's awesome, right? Feels more like passive income. The market does not pay you for activity. It pays you for being right. Yo, shout out to Al Jr. I love this saying. The market does not pay you for activity. It pays you for being right, and being right means doing nothing and being patient till your level gets hit. But one thing I will say is oftentimes the market won't even necessarily pay you for being right, but it'll pay you for making the right decision when it feels wrong. Take buying Bitcoin at the bottom of the bear markets, for example. I am not impervious to emotions, guys. My discipline to not make decisions based off my emotion is very strong. But I am not impervious to the emotions. I feel them, guys. I feel them. Trust me. Down here when I was accumulating Bitcoin, right, I got everyone, especially on YouTube, you kind of expose yourself to more criticism than we might be going for this local liquidity. Hang on. Skirt. Hang on. Just saw it on the liquidity charts. Might be going for this liquidity. We're getting close. This might be reverse blue chew here if we could come down to these lows. Oh, man. We don't want the reverse blue chew. Set an alert there real quick. But, take it from a long-term perspective. When I'm buying here, especially with the YouTube channel, you got everyone and their grandma like, yeah, this guy's an idiot. This guy's a moron. You're an idiot, right? And this is also on top of super bearish sentiment. Oh, my God, everything's dumping. All the bearish news. Exchanges are going down. USDT, oh, my God. But I'm just sticking to my plan, Don't listen to him. Don't listen to him, man. Don't listen to him. You bought tops before. You've bought bottoms before. Just, this is the better way to do it. Oh, this idiot, you're buying here, we dumped again. Don't listen to him, man. Don't listen to him. And, I got paid out massively for these decisions that I made, right? Literally bought the bottom of the bear market for a massive move, right? Into the next cycle. Everyone thinks you're an idiot until you're not. And I got rewarded, right, for making the right decision when it felt uncomfortable. Similar to what Al Jr. was saying. A little bit different. There we go. There's our liquidity. It's not magic. It's TA. Will she flush the licks? I mean, she's already flushing a lot of them. Let's pull up the key levels here. No way. Bro, this is literally the daily MPOC that was pulled on the wrong time frame that I just had. I'll give you the exact level. That's kind of crazy. Yeah, it literally tapped it to the dollar. It was sitting at 64,443. That's insane. Let's see. Not 60. Why did I? 62,443. 63. What am I doing, guys? I've never been dyslexic, but maybe they just messed up. Yeah, look at that. Insane. Should have kept it on the chart. Yeah, you got a TPOC just underneath that as well. Like, literally. Right there. So maybe get a little bounce there. But you still have a lot of liquidity sitting below. Pull up the liquidation heat map here. So that's what I was looking at when I said, oh, we might take that liquidity. We're approaching that yellow box. Typically, you can see a fast flush through these licks. Sweeper. Again, this is where a lot of people feel, oh my God, I'm going to short. This is action, right? Like, you want to be in the trades before the action. Will that be enough, or does she have to sweep the rest of that? We can keep an eye on this for a minute. To the dollar. Yeah, literally to the dollar. Insane. I should have left it on the chart. It was pulled from the. So the only difference is I was looking at a 5-minute time frame, which changes the profile slightly, which moves the MPOC. So I like to find them on the 30-minute. The 30-minute profiles. But again, right, like, price never really reacts for no reason, right? So, like, even though this might not be a solid daily MPOC, and we just go through it, right, it's still going to give you some kind of reaction regardless of where you're pulling it from. Like, I don't look at 5-minute support levels, right, which would be like something like this. I don't look at that, but if price could bounce off that level, it's just not going to be a significant level I'd be paying attention to for some kind of massive move. Which may be what we're seeing here, right? A little bounce, a little support, but maybe you come down and flush the rest of this in a second. So also the golden pocket. Come on, there we go. Oh, yeah, very close, very close. Barely front ran it. Just barely, at least on this exchange. We could check the USDT chart as well. Yeah, tapped on the USDT chart. But you still have a lot of that liquidity down below. Will she flush? 786 just underneath the end of that liquidity. Yeah, shout out to Deb, said every time I momentum trade, it suddenly reverses. Yeah, I mean, I think the reason that oftentimes happens is that's why I'm not a momentum trader. Again, I'm not saying you can't make money momentum trading. There's people out there that make tons of money momentum trading. But the reason I don't do it is like, you're reacting after the move, right? And, I guess you can consider entering in, I guess sometimes I trade momentum where it's like, hey, if I'm looking, we get a dump, I'm looking for a retracement and then looking to enter, assuming that I have money flow on my side, saying the trend is going to continue down. That does not mean that I'm going to enter in as price is dumping, right? I would rather wait for price to dump, get a little bounce, find the retracement level, which very oftentimes is going to be a golden pocket 786 retracement. There it is. I would simply let this happen. I'm not going to try to short here, right? And then endure that bounce. Could you? Sure. But I would rather wait for the bounce into the key level, then enter the trade. Get in on the retracement, all right? Then you can at least be in profit sooner instead of like shorting here, going through the drawdown and wondering if, most people aren't going to set a stop loss. So should I stop it out or should I just hold it, right? You can at least enter in with a clear invalidation, right? If I short here, right, very specifically, if I short here, where's my stop loss have to go? My stop loss has to go like above one of these highs, right? And then where's your take profit? Maybe it's the POC, right? This is a terrible risk to reward, right? So what would I rather do? I would rather say, hey, let me get the retracement into the golden pocket, short at resistance, and then I could set my either stop loss above here. I would personally put it above the 786 so I could take a bigger position size. Now I have a good risk to reward and a clear invalidation. If I break this 786, I'm looking to take out these highs, right? I don't know. That's the way I do it. All right, so a little post-FOMC volatility. Shout out to Enrique, says, I chased the short at 64K lol, stop loss, be no risk. Yeah, I mean, listen, at least if you set a stop loss, at least you're not just randomly, At the end of the day, all right, I always say this. If you wanted to take trades, flipping a coin, heads is short, tails is long, and you're managing the risk, that's better than just gambling, right? At least you can manage the risk. Shout out to Red. I don't know how to say that name. I'm gonna call you Red. Said, could you give a target to purchase BTC for the long run in 3 years? I mean, I'm already partially exposed. So I'm not gonna tell you. Let me take some of this stuff off the chart real quick. Right, I'm not gonna sit here and say, wait for this exact level to buy, right? When it comes to the long-term cycles, dollar cost averaging, DCA is the way, as they say. I ain't a rapper, though. So for me, like, I'll use this as an example for, like, the last cycle. I typically, right, once weekly money flow crosses into the red, right, which does not happen very often. We've only had, like, 3 of these, not counting the current one, in the entire existence of Bitcoin. Once I see that weekly money flow cross over into the red, that is where you're very likely to capitulate into the bear market. Once you get that first big capitulation, that is where I start to slowly dollar cost, well, I guess it would start up here, right? Start to slowly dollar cost average. My goal is to just try to catch the bottom of the accumulation, right? So I was buying here. I am not upset when I take out the lows and dump again, right? I'm just looking at that as an opportunity, and I personally do a dynamic dollar cost average, buying small bags, and then the bigger dumps come in. I do bigger bags and bigger bags. That's how I handle it, right? I'm not worried about, oh my God, I have to hit this level and then put my whole bag in. I think it's very dangerous. I think it's super stressful, and I don't think it's worth it when you're looking for a massive cycle to continue. You're not worried, right? Like I always say, my average entry price, buying in at those prices, was about $20,000, $21,000. I don't care that my entry was here and not here when I'm capitalizing on an entire bull run, right? I just want to accumulate inside that accumulation zone, right? So for me, here's the weekly money flow crossover. Here's your big capitulation. I am partially exposed into the market. If we do get the bigger dumps down to the 50s and potentially the 40s, I will weighted dollar cost average, And then hopefully in the long run, right, I can't guarantee, I personally hope that it plays out like this one, that I have an entry somewhere in this accumulation for when we're at much higher prices, right? Even back here, I wish I had an exact live stream to point you to. That's still on the channel. But I used to always say, when I was explaining that, just like I'm explaining it in this current scenario, back in 2022, I would tell everybody, like, hey, like people would be like, well, wouldn't it be better if you have a key target down here to just wait to buy? I mean, yeah, if it happens, right? Like, of course, right? Like, people always forget about, like, the nuances. It's like, well, if you have a target down here, like, wouldn't it be better to just not, if you have a target here, why wouldn't you just not buy until that target gets hit? Because the target's not guaranteed to get hit. What do you mean? So I used to always tell people, like, I'm not going to care if my average entry price is here, 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 or here when I'm at $120,000, right? I'm just going to look back and say, well, hey, I'm very happy with my entry down here. Right? It's going to be the same thing in this cycle for me. So there is no key level. I'm already partially exposed. If we get more dumps, I will continue to dollar cost average in with bigger bags. That is not me telling you to buy Bitcoin right now. And it's not just the fact that we had the weekly money flow crossover. It's also many other technical factors, such as the weekly bullish divergence, a bunch of other things I've gone over a ton. So I'm going to skip the repetitiveness because we even went over it last night. So that's my plan, right? That's my strategy. That's how I do it. Doesn't mean you have to follow me, right? If you want, I always tell people, if you want to wait for 30K because you're expecting the 4-year cycle to play out, that's a possibility, right? That's a possibility. And if that's your case and you want to wait till October to hit 30K to buy and you're not going to buy anything before then, that's fair, right? That's fine. But I would recommend asking yourself, do you have a plan if that does not happen, right? That's kind of why dollar cost averaging for me is a better strategy for long-term investing, right? Because of course we have our major support levels in the 50s. I'll just pull up the 300-week moving average. I always do this, right? I'll pull up the 300-week moving average. That's typically in the past been around where the bottom comes in. Instead of me saying, I'm not buying until we hit this level. Right, that's very certain. There are no certainties in the market. Zero certainties, 100% certainties. Right, it's just like this. Like everyone will tell you we have to hit 140K. We have to hit 150K. Like, sure, that's a technical target. That does not mean it's guaranteed to get hit. And that not looking at the chart like that or not looking at my bags like that helped me not hold on for the hopeless attempt at 150K. Right, I was able to make money. So at the end of the day, instead of me saying, I'm not going to buy anything until we get here, I ask myself, well, what happens if we don't go there, right? What happens if we don't hit it, right? What happens if we don't hit that lower level, this lower level, this lower level? Well, I slowly dollar cost average in with the heavier weighted bags on the way down, right? That way, if the bottom is in right now, say, potentially, I'm not saying it is, but, who knows? Nobody knows, right? It could be. Even back here, I was very more confident because we had all the things lining up, technical indications, money flow, timing of the cycle, percentage drawdown. Here, we have the technical indications. The key levels are very close, if not tapped. But you also don't have the timing of the cycle. It's not everything pointing in the same direction. This bear market was a lot easier to navigate than this one. But the way when I ask myself what happens if that doesn't get tapped, I say, all right, well, I'm partially exposed down here. If it takes off and the bottom's in, I have a lot of exposure. If it's not, and we come back down and get a massive nuke, well, I have dry powder to buy those bigger bags on the way down. So just food for thought. That's the way I do it, right? Now, I'm sure there's some people out there that wait for the key level. You just have to think, what happens if your key level doesn't get tapped? You have to have a plan. Shout out to AV Creation said, I like that Frankie never says BTC must do this or must do that. I turn YouTubers off that say that. Yeah, dude, I mean, because they don't. Nobody does, guys. I think I'm just like one of the very few people because I actually do it, right? Like, I think there's a lot of people out there that it's like the Dunning-Kruger effect, right? I have a lot of experience. I actually have a lot of experience, right? I'm very transparent. And Dunning-Kruger effect is basically when you don't have a ton of experience in something and you start to learn about it, right? Think about trading. You don't know a lot about trading. You watch a YouTube video about one strategy, and you think you're a market expert, right? You're like, oh, my God, well, you got to watch this indicator because this is what moves the market, or you have to watch this thing because that's what moves the market, right? it's false confidence, right? And confidence sounds very good when you're on YouTube, right? But it's very dishonest. When someone tells you we have to, think about the people. We were going to hit 150K, guys. Don't worry. High or low. 150K incoming. There's still hope. We're still bullish. There's no reason to be bearish. There's no bearish narratives. Oh, my God, it's going up. That is the Dunning-Kruger effect, right? It's like the more you know, the more you realize that there is tons of nuance and the more uncertain you become, which is interesting, right? Because it's like you would think the more you know, the more confident you are. But in something like financial markets, the more you know, the more you realize there is no certainty. And the only certainty to make sure that you win is to control the things that you can control, which is not the price. Not we have to hit this magical target, right? That is something you cannot control, is not certain. The one thing that is certain that you do have full control over is having a plan, a strategy, and following that. Right, having the discipline to follow those strategies, the risk management strategies, the entry strategies, all that stuff. Those are the things you can control. So, a lot of people who are really green, right, meaning new, not experienced, they'll come in here and be like, you just said it could go up or could go down. It's like, that's what you should be looking for. If you're looking for someone to tell you it's going up guaranteed, right, you're going to get cooked, right? These are people that are probably don't have a lot of experience. They think they know, but they don't know, right? That's the truth of the market. Any real trader will tell you that. No one's going to be able to, the best trader in the world's not going to, the only thing they will tell you with certainty is that nothing is certain. That's the nature of the markets. So yeah, that's like literally, I wouldn't say by design, but it's just by like natural occurrence, right? I can't be certain because I know enough, I'm experienced enough to know that nothing is certain, right? How many times have we heard it? Yeah, guys, super cycle, it's going to 100K. Super cycle, guys, lowering rates. Oh my God, 200K, right? No. And those people will say that, right? A lot of people will say that with a lot of certainty, right? And certainty sells. But it's not going to make you money. I'm in the business of helping my community make money, not make them feel good about what they want. So, there you go. Stoicism is peak. Yeah, I'm agnostic, I always say. There's never, even like, and again, there are times where you can be very certain, right? I would say like the most notable time that I have been very certain on something, even the things that I am very certain about, right? I could have everything I want to see. If I want price to go down, right? Or my thesis is that price is going to go down. I could have every single thing line up saying it's going to go down from a chart perspective. I am never going to say it's 100% probability because it's the simple fact, right? It's not an opinion. It's a fact. Just because all this stuff is pointing that way, I'm not going to set a stop loss, right? Everyone wants the market to be that easy. Oh, the cycle's over, no stop loss, short it. That's not how it works, right? You always have to manage the risk. But the most notable times recently are up here, right? Massive weekly bearish divergences, high time frame money flow coming out. As we started to see this pullback, I sent the warning shots that on this retracement, if the money flow on the 2-day continued to the downside and started crossing red, that we would likely be that the top was likely going to be in at 126K. I think my exact wording was, hey, guys, if we get the bounce here and this money flow continues out and does not yeet back to the upside, I hate to say it, but it's time to start thinking that it is very likely that the top is in at 126K, right? Very certain. We had tons of stuff pointing towards this. It was the exact mimic of 2022 or 2021. But you will never hear me say, that's it, 100% guaranteed going to go down. Right now, of course, the higher probability scenario played out. I wound up being correct. That's awesome. I'm very happy about that. Right. But if we wound up just somehow shooting up here, sure, I'd be like, wow, that was very unlikely. But even if it's an 80% probability, there's still a 20% chance that it might not play out. And if there's a 20% chance that it might play out, that it might not play out, you bet your bottom dollar I'm going to be having stop losses on the shorts. Like when I shorted here at 124K, just because we had a weekly bearish divergence, there was no 100% guarantee that we were going to get the big move down, but it wound up playing out very nicely, right? But I still had a stop loss in case I was wrong because I've been doing this long enough to understand that nothing's 100% probability. I've seen perfect trades play out. I've seen perfect trade setups play out. I've seen terrible trade setups. I've seen great trade setups not play out. I've seen terrible trade setups play out. Right now, obviously, great trade setups play out more often than not, and terrible trade setups play out less often than not. It's probabilities, right? No certainty. So, we can make the strong convicted calls while also, I'm always just very transparent with people. Like, just so you know, I'm not just going to say, hey, we're going down. Not only would I say there's a chance we're going, there's a small chance that we could continue up. I'm still going to bet on that move, but you should protect yourself as well against the randomness of the market, because you better take it to the bank that I'm going to be doing that too, right? I'm not just going to be all in here, no stop loss, right? And I think that really helps people make more money, right? It's not just sensationalism. Worse the money, baby. Always a possibility game. Yeah, absolutely. 237 likes. Can we pump it? Let's get it to 350 at least. Bear market like goals are sad, man. They're sad. Let's take a look here. Lower time frame. Try to go back down through that liquidity a little bit. Bullish divergences on the 1 minute. Bull divs on the 15-minute. But that money flow. Do we have an 8-hour red dot potentially coming? Oh, there it is. Yeah. So confirmation-wise, you do have low time frame bull divs into this. Also, where it was 63.6. Pull up the local range. I could take this off. Yeah, so you're putting some lower time frame bull divs into the golden pocket. I'm just not a huge fan of this 24-minute and 30-minute money flow coming out with this 8-hour red dot. So could you get like a local bounce? Maybe. I don't personally like this for a massive move. But this is really the level that you would want to hold up if you still, right at this point, if you still want to see a full rotation of this volume profile. This is the zone to hold. Once you lose the 786, you're very likely coming back down here. Try to pull this. Yeah, look at this profile. This is so sketchy. Could pull this, right? That's probably the only profile you really have. Yeah. Not a fan of that. And you still have some of the liquidity down below. Let me pull that back up here. Yeah, still some of this liquidity that could get flushed. Oh, there goes. Will she hold? But yeah, for me, this isn't really a key level, right? I like to take the trades at a key level, at least a key level that I'm looking at. I'm not saying no one else has key levels there, but for me, golden pocket, but just no confluence. It's the 304-hour moving average. It's the 4-hour doing. Red dot confirmed. Was that a blood diamond up here? Could be. Yep. 4-hour blood diamond into the golden pocket. You're rejecting the golden pocket 786 from this pull as well. So, yeah, it's really just the money flow. 4-hour money flow coming out. This is... Yeah, I think it's probably going to be a little higher probability, again, although against the volume profile. The money flow crosses red. 30-minute money flow crosses red. I would probably anticipate, especially once you lose the golden pocket 786 here, that you're going to take these lows out. Yeah, 786 sits at about 63.68. Yeah. So I'd be careful. If you do get a bounce here, it might be very local. Is the blood diamond on Market Cipher B? It is on Market Cipher, but it is on Market Cipher A. So Market Cipher A gives you like the candle confirmations, and then Market Cipher B is the momentum waves and the money flow. This is not something I trade based off of. It's more of something that I like use for, if I were looking to short this lower high, right? We retest, you get the blood diamond. Like that makes me feel good in the short. You can see there typically bearish, 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 bearish. Not something I trade as a signal, but does indicate downside. So see if we can get a local bounce off that golden pocket. I would just be very careful if we want to really nitpick this thing. I don't want to confuse people. If anybody's out there scalping and you get a bounce here, I'd be very cautious. Maybe even around I'd be very cautious around that POC retest if you can get it, right? Because again, you have liquidity down here. But if you get that POC retest, what does this give you? This gives you a 1.38%. And this would probably be not a bad place to look to take some profit in case you put another lower high and then continue down towards the value area low. Man, I yearn for the days where we can get this money flow to just clean itself up. Look at this 5-hour money flow, guys. This is just brutal. It's just market conditions. I was telling the premium Discord earlier, not earlier today, yesterday we were live in the premium, and I was telling them, like, you have certain market conditions, right? Some market conditions are super clear, super clean, right? For example, like back up here, very easy for me to have the bias of, hey, this looks like it's going to be a lower high. We shorted 98K. I'm still holding a portion of those trades for massive drops down. This is a much cleaner market. The signals are much cleaner. There's much more volume. There's less choppiness on the money flow. It was much clearer. And this is just, you have no control over that. You're going to have clean signals, and then sometimes you're going to be typically at the bottom of bear markets, very choppy, very, just gross, conflicting stuff, right? Just because you're in that low volume, choppy kind of situation, right? So like this, I used to tell people back here, if you're learning how to trade, like you are trading the hardest part of the market, right? Things will get better, and you're kind of like entering trading 101 on mythic mode, which is great, right? Because if you learn on mythic mode, once you get into standard mode, it feels like a cakewalk. So it's kind of good, right? Same thing here, right? This is a very, very, very difficult situation to trade, right? Just look at this money flow on the 2-day time frame. It's just blah, blah. And I'm very proud of how we've been able to call these moves in the premium, been able to trade these moves, get all those pivots, even with the mixed signals. But I was telling them, like, if you're feeling that these markets are difficult to trade, do not feel bad, right? Because even for me, I've been breaking a sweat here recently, just like, man, the signals are there, but it's very hard for me to confirm with all these mixed confirmations. Again, doesn't stop us from taking the trades, but it just makes it a little less comfy. Can I see your settings on Market Cipher B? My settings are default on Market Cipher B. The only thing I have taken off here is the RSI, and I take off some of the lines to clean it up. Other than that, the only real, I have no changes to the calculations or anything. It's all default. The only thing I have changed is the colors, and I just hide some of the stuff I don't use. So there you go. I mean, if you want to screenshot these settings, I also have a tutorial showing you exactly how to set up your Market Cipher B like mine, but if you want to screenshot these, feel free. Shout out to Clapjack, said, I wish I could buy 34K. It will never let me. Shout out to Clapjack, yeah. That would be nice, right? If we did nuke down to 30K, I would see that as the buying opportunity of a lifetime. Market Cipher A. Oh, Market Cipher A. I don't think I have anything changed here on Market Cipher A. Oh, yeah, I do have things changed here. Let me pull that up. I hide the, again, it doesn't mean you have to hide them. I hide the EMA ribbons just because this is just too much for me to look at on the day-to-day. So I just clean it up. Oh, no. Not gonna. Oh, actually, no, I could just do this. All right, so I just set it up to show blood diamonds. So I just take off all the ribbons, and then I take off the yellow diamonds, I take off the blue triangles, I take off the green dots, I keep the red X, the yellow X's, and the blood diamonds. That's really all I use them for. I find them to be the strongest confirmations. These yellow diamonds are pretty cool too. Usually when you see clusters of these, I believe these indicate like continuation. You'll see these on the moves to the upside, right? So you get like a nice cluster here, pull back, continue, cluster, 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 pull back, continue, right? Then you eventually top out. But it's just not something I use on the day-to-day, so I take them off. And I just have yellow X's, red X's, and blood diamonds. Shout out to Indy Martini. He said, Franklin Candle Roosevelt. Shout out to Martini. Said, could you take a look at NASDAQ for me? Curious on what levels you see for support. Yeah, I could try to take a look at NASDAQ in a minute. Just make sure to miss anything here in the chat. I still have my limit spot buy set at $12,000 from the last bear market. I'm starting to think it probably won't fill. Shout out to French Toaster. I don't know. I mean, if you listen to the Bears, I mean, a lot of people calling for zero on Bitcoin. I just watched Anthony Pompliano's interview with Peter Schiff. Crazy, man. Crazy. Going to zero. It's going to zero. I don't know why people ever invest in Bitcoin. It's never done anything. It's never gone up. And they always point to the most recent things, right? Now, smart guy, right? Not taking that away at all. But, you know, I mean, everybody's got their own thing, right? He's a gold guy. That's great. It works awesome for him. I don't think he should change it, right? Like, you don't have to. Not everyone has to love Bitcoin. But I just, like, I have a problem when people just say, like, if cattle futures outperforms Bitcoin for 5 minutes, people start saying, oh, my God, Bitcoin just goes down. That's all it does. They just, like, ignore that it's gone up massively over time. He did make some good arguments, though, because he did say, he was talking about how, like, you can't really say, I mean, this is obviously true, right? Bitcoin has gone up massively over time. But he's like, you know, like it was a different asset back there. And I talk about this all the time, right? Like these massive gains are when the asset is super young, super high volatility. Obviously, Bitcoin is still high volatility compared to other things. You know, I thought that was a valid point. But it's like, you know, it's just crazy. Shout out to Clapjack, said 256 like, come on, Frankie deserves more. We teach you how to make money for free every single day right here on the Frank Kettles YouTube channel. Smash that dang like button. Push us into the algorithm. Yeah, shout out to Darren, said I only use Market Cipher A for yellow X's and blood diamonds, and I coded inverse blood diamonds and yellow X's too. Yeah, shout out to Darren. Somebody sent me, and I kept this. I actually kind of liked this. What is it called? I think it's just called Cipher A. Somebody, guys, Crypto Eats the World, I think is his name. I have no affiliation. He gave this to me for free. And it's basically reverse coded. He called these money diamonds, and I don't know what these are. I think just X's. Yeah, money diamond. And yeah, this is basically just inverted blood diamonds, right? Blood diamond, money diamond, move up, right? Money diamond, move up, money diamond, move up. Money diamond, move up. Again, I wouldn't treat these as signals. I think a lot of people would treat these as signals. I don't trade them like that. I know Darren probably doesn't either. But yeah, these are. I used to actually pull these up somewhat often. But yeah, to be honest, I don't really pull up Market Cipher A super often now. If I do, it's like I take a peek at the higher time frames. I typically look at Market Cipher A and the candle confirmations on higher time frames because they are more significant. Like weekly blood diamonds, right? We don't see these very often. So if I saw weekly blood diamond print here, it would be somewhat alarming, man. It would be very alarming in my opinion. But yeah, super dope. What's my BTC view right now as educational purpose? Shout out to Reacher. I don't know exactly what you mean. just like my overall thought process. If you scrub back to the beginning of the stream, I just don't want to repeat it for the people who have been here. We discussed it twice, but if you scrub back to the beginning of the stream, I cover the higher time frames, right? I'll give you those like super brief money flow coming up on the daily. This does indicate that you could still look for potential high time frame trend continuation. Invalidation to break down below the $57,000 or 57.6 lows is going to be this golden pocket 786 between 61.3 and 59.650. If we come for the bigger pullback, this must hold to put in the higher low. Once we lose this, I am looking for probably a pretty decent dump back down below the lows. This would be the invalidation of the higher low and higher high, and because the money flow is still technically trending green, we could still potentially look for those continuations. Locally, I am suspicious of the bigger pullback into those bigger key levels to put the higher low in. Yeah, shout out to Dark Side. I hate when people talk down other things just to try to make what they're talking about great. Yeah, and I even talk about this like trading strategies, right? Like I am not a pattern trader. I have very specific reasons for that. There are people out there that make money trading patterns. It's not for me. I think there's better ways to trade personally. But yeah, it's like, even as like a Bitcoin guy, like I'm not just gold is the worst thing ever. You're never going to make money with gold. No. Like Peter, it works for him. Like it's good for him. Like I genuinely don't think he should get into Bitcoin if what he's doing is working for him, right? Like different strokes for different folks. The problem I do have is when people just like, yeah, no, Bitcoin's trash. I mean, and then like they love it because like they'll talk about it in bear markets, and like someone will be like, well, like why do you hate Bitcoin so much? Like it does so well. I'm like, well, easy, man. Why don't you just do me this? Do me this. Tell me how much Bitcoin is up in 2026. Oh, it's down 50%. That's why I hate it. And they just ignore every other thing. They ignore this. They ignore this. They ignore this. They ignore this. They choose to focus that, of course, it's a volatile asset. Of course, it dumps, right? And to normal Bitcoin people, this seems obvious, right? Like, it's easy to talk trash about Bitcoin here, right? Interview them, right? A lot of these people have past interviews. Bitcoin will never go to $100,000. Interview those people when we're at 126K, right? And then they'll just say, well, it's going to go down again. Yes. And then it will go up again. It's just, just agnostic views, right? Someone could tell me, hey, I don't use volume profiles, money flow, or anything like that. I trade based off what my goldfish tells me, and I have been making money for 10 years. I would genuinely tell that person, screw volume profiles, screw money flow, listen to your goldfish. Why would I tell you to stop doing something that's making you money? The only reason I would do that is to make what I'm doing seem like the only thing that is good, right? It's just simply not the case. Shout out to Reacher said, I'm not good, but as my analysis, it will pump to 64.7. Will would be the wrong terminology in my opinion. Could would be a little bit better. Again, setting those traps, 64.7. I don't know exactly what you're looking at that says that will happen. But yeah, I mean, listen, if what I'm looking at locally here, where are we at? All right, what I'm looking at locally here is if you could get back above the POC, flip it into support, I would be looking at about 65.2 as the major target of interest. 64.7 would just be to take out these highs. And, I mean, listen, if you can hold a higher low, getting a little bounce off that golden pocket, put in the higher low and a higher high, could potentially see that happen. But my problem with that is you got to fight back above that POC, right? Like, and again, back to kind of like just trying to catch every single move. Like, I'm not interested here, right? I'm in the long from the low. If this continues up, I will take more profit, and then I will be interested in potential shorts up here. In between, I'm just not interested. I don't care, really, if we come up to take 64.7. It'll just be, okay, cool. Now let's see if we can hit the value area high. Only time I'm interested in actually taking action will be up here or down here. So, yeah. I don't know if that helps you out. I apologize if it doesn't, but... there you go. All right, let's check out the traditional finance real quick. Almost at a 3-hour live stream here. Yikes. SPY dumping. It's dumping, baby. Is this a surprise to the mafia? No, it's not a surprise to the mafia. Why? Money flow. spotted here coming out on the daily time frame. And we see that is very likely to do what, guys? Very likely to continue the overall downtrend for higher lows, lower highs, lower lows, lower highs, lower lows. Money flow now creeping towards that zero line. Oh, my God. I would say on the SPY, anchored VWAP 723 is going to be a major key level of support. And let me just pull this fib real quick. Might be losing this. No. So, yeah, this is the biggest level of support, in my opinion, right now. And I'll pull it down to the anchored VWAP, which technically sits between 723 and 731. This is support. If we bounce here, money flow is coming out, indicating the same thing it was indicating up here as it was starting to come out, which is lower highs, lower lows, lower highs, lower lows. So if we bounce here with money flow continuing out, right, this indicates the overall trend. Doesn't mean you can't bounce. Doesn't mean you can't bounce. Doesn't mean you can't bounce. So if we bounce here, we could, right? It's definitely support, but I would anticipate that to be a lower high and a lower low. Once we lose this anchored VWAP, yikes, I would say your biggest level, let me pull up the VRVP, or VPVR as I like to call it. Yeah, look at that. Yikes, man. Yikes. You got a high volume node here. Sitting at about 710. Should we start trading stocks? Let me know if anybody would be interested in that. Because they're just charts. We could trade that just like Bitcoin. I don't have my thumb on the pulse of the traditional markets like I do. Do I not have a high? Am I blind here, guys? Do I not have a high volume node? All right. All right, so you have a high volume node here. But look what you have, right? You have massive low volume gap below that 786 anchored VWAP. So if I were to draw something out, right, in like very elementary way, of course I'm not expecting this to be the exact movement. But if we get a bounce here, right, lower high, money flow is indicating the trend will continue down. So once we lose the 786 anchored VWAP, very fast move through this zone, in my opinion, down to the high volume node at about 710. Maybe another potential bounce. If we get down here and money flow is just starting to cross red, it could indicate an even more big continuation to the downside. Once we lose that high volume node, another potentially big fast push down through that low volume gap. Price likes to stick to high volume nodes and fly through low volume nodes, right? Just like on the way up. If we lose this, probably going to be a fast move down. Lose this, fast move down. Fast move up, fast move up, fast move down, fast move down. Very simple, very visual. This is now a massive high volume node, which essentially brings you back down to your previous value area, which would make a ton of sense to me if you lose that anchored VWAP to get the bigger move down towards your value area, sitting right here between 696 and 672. So, yeah, I mean, this looks bearish, in my opinion. Now, we are talking about the stock market, so understand that. It doesn't pay. I mean, I would short the stock market generally, but I'm not looking to hold swing trades on stocks for a very long time, right? Like this thing's just going to Ponzi up forever, for the most part. So yeah, key support might get a little bounce there, but eventually, I would say the biggest key level, I'll even mark it off. We lose this. I would expect a fast drop down here. It would be interesting to see what we get on that wick as well. And then once we lose this high volume node, I just look to come back down to this value area. So there you go. Money flow coming out. Looks bearish to me. Looks like higher probability is continuation down. Something like that. Now, where would we look for the lower high? Let's see if our key level got tapped here. We have the anchored VWAP from the top. So when we pull this fib from the high to the low, this is the highest probability area when we see money flow coming out. Very simple. Masterclass in money flow. People charge you for this. When we see this money flow coming out and we look for lower highs, lower lows, lower highs, let's say we're right here, right? This is where we were last time we looked at this. When we're looking for a place where maybe, hey, if we're going to have money flow coming out, we're looking to go down, maybe you want to catch a short. Where are you looking for that short? Very simple. pull your fib from the high to the low. There's your Fibonacci retracement, the highest probability area to put in a lower high. Right? You also had your anchored VWAP confluence. That is the resistance to potentially look for the shorts to continue down. Right? And in this case, stop loss can go above the 786 or the high, right? Your target can be your key level of support, which could be the golden pocket 786 anchored VWAP, something like that, right? 2%. Well, it looks like a massive move on the stock market, right? This for Bitcoin would be like a 5% move. So nice and simple how you can find those trade setups, right? So I'm going to do this exactly live, right? Just like we did last time. If we get a bounce here and we're looking for lower highs and lower lows, well, it's going to depend on if the low is in here, right? If we push down to the 786, you're going to have to move your fib to the actual low. But right now, I would say if you're going to put in a lower high and lower low, assuming this low is in, right, and you're going to get the bounce from here, if you push down, you're going to have to move that fib lower. But let's say we bounce off the golden pocket. This would be the next major place to look for a lower high before taking out the lows again. And if we bounce here, you'd look for the lower high, target the 786 anchor VWAP. If we get the push to the 786 right now, you would pull this down, and then your key resistance would change slightly, right? So I'll put this, just like we did on the other live stream. Level wound up getting respected. I don't trade the SPY, so hadn't looked at it in a while, but this sits between 737.40 and 739.84. So there you go. Maybe your anchor VWAP becomes confluent there as well. So high time frame, key local levels as well. There's the SPY. Let's see. Let's check NQ. Shout out to Martini. Sorry, I looked at the SPY first. He wanted to see this. Haven't looked at NQ in a while. Could take this off. Old fib, old fib, old fib. Value area high. POC. Value area low. So on NQ, I'll be honest, you're kind of already losing your major key level. You're already losing your anchored VWAP. So, yikes. Money flow crossing into, or looking across, money flow crossing into the red on the daily. This would be like the 2-week red dot printing. If you have a 2-week red dot printing right now, that is a bearish market cipher B setup, and I would expect a continuation down. 2-week red dot is confirmed. It's technically the 16-day. So let me pull up the 16-day. Of course I can't. All right, nice. But very similar, right, to SPY. Kind of the same situation. Daily money flow coming out. What does that make me think? That makes me think lower highs and lower lows for an overall continuation down. Pull up the VPVR. Yeah, right. High volume node, high volume node. Massive low volume gap. You have little choppiness in here, tiny little medium, low, high volume nodes, but I wouldn't consider them high. Overall, massive gap. Fast move through the gap. Right, I'll just circle this. There's your gap. There's your fast move up. Here's your high volume node. Price sticks. Right, this is what creates the high volume node. Right, once we break back into this gap, of course, you're going to expect fast move up is a fast move down. And then this is literally what we just looked at on the SPY, right? Lose that anchored VWAP, very fast move through that low volume gap. So I would expect, if you can't, get a massive bounce out of this gap and really start pushing from here, eventually fill the volume profile into essentially the same level, which is the previous value area, which sits right here at 25,708. I'm sorry, 25,708. POC sits all the way down there at the bottom of the range at 24,815, and value area low 24,580. So, of course, right? I mean, ideally, you want to spot this where SPY is right now, which is kind of like hanging out up there above the anchor VWAP. Lose it, expecting a fast move down. pull that SPY up again. You guys can see how I come to these conclusions, right? I'll take this off for cleanliness, right? Lose these lows, lose this anchor VWAP. Just take that kind of medium volume node out. There's your big low volume gap. Fast move up, lose this, probably a fast move down, right? And NQ's kind of already doing that. So, yeah, I mean, that would really be what I'm looking at. Let's pull our fib from the low to the high. What's higher here? Hang on. 975. Okay. Major support. Major support. Right on the value area high, and then right on the POC value area low 786. So yeah, that is what I would expect here. Lackluster retracements for lower highs and lower lows would be the anticipation here based on the technicals. Again, yeah, I mean, maybe, I don't know. I don't know if you're going to get this big retracement, but even that, right? Retest the anchored VWAP. If money flow is still coming into the red, this would be major resistance sitting right here between 28,539 and 28,905 for a potential lower high and a lower low. Again, I don't know if you're going to get that full retracement. You might just put in a local retracement. I'm not going to cover every single level here. Data is delayed. Interesting. So yeah, that would be pretty much what I'm looking at. Again, I can't guarantee you get up there, but that is definitely a key level of resistance. Let's pull the anchored VWAP from the top. Just having fun here now. Yeah, you do work your way up there. You'll have the anchored VWAP from the top pushing down there as well. So, yeah. Early money flow crossover with key support in sight inside a low volume gap. I got to anticipate something like that. So there you go. Time will tell. Let's see. All the money's going to rotate back into BTC when the stocks start dumping. I like that. I like that thesis. The only thing that kind of steps on that for me is that, traditionally speaking, more often than not, we do see Bitcoin follow the stock market, right? So that's kind of what makes me wonder. It could be, right? It could just be a full rotation of capital. And that would be very good. But it's just, would it be very common to see the stock market dump and Bitcoin absolutely rip? Not normally, right? So there is a little bit conflict there. But I don't know. Maybe the AI bubble pops and it goes back into Bitcoin. Let's see. Shout out to Javi. I think it's probably Javi. But shout out to you, bro. Thank you for the super chat. Said, what do we see going on silver? Guys, should we start doing other stuff? Maybe we should. That would be fun. People be like, why is Franken along on NASDAQ? Get back to crypto. But let's check in on Bitcoin here real quick. Yeah, nothing really too exciting here over the past couple of minutes. Just still getting the bounce off that golden pocket with the low time frame bull divs. Yeah, not really too much from the last few minutes ago. But yeah, I don't want to continue to repeat the exact same thing that we've talked about. It's always difficult, right? Especially when we're live for 3 hours. People pop in and they'll be like, What's with Bitcoin? It's like, just scrub back. We went over it. I went over it like 3 times. It's hard because I always want to re-explain it, but it's really difficult for the people who've been here for a while. Let me just make sure I don't miss anything here in chat. Frankie's dad bought. Send it. Shout out to Mohammed. That's the buy signal, low key. I'm kind of front running his entries. He's not entered yet, but I will say this: when he enters, I'll feel a little bit safer on my entries. Shout out to Shaw's Official with the check mark in the chat. Shout out to you, brother. Said, watch Bitcoin, BTC. That's funny. But here we are. I'll keep the chart up for a second. But shout out to Shaw's. If you scrub back to the beginning of the stream, I go over exactly what we're looking at. If you scrub past the FOMC live stream and go back to Bitcoin, you'll get the most up-to-date because things did change a little bit. But shout out to you, brother. Flexing the check mark, baby. We're coming for a check mark at some point. We're going to need Bitcoin to do something. Crypto Billy in the chat said, show ETH. Shout out to Crypto Billy. Hope you're doing well, bro. Welcome in. Thank you for being here. Show ETH. We got to show ETH. Let's take a look. Because we looked at this as well. No real update here. Just still inside the volume profile. Key level of support. Lose this. I'm looking for this bigger level down here. May actually, depending on the confirmations down here, between... and I think Billy's saying show ETH for the meme, but that's okay. We can still check in. 1734 to 1800. I may be interested in potential longs if we get the confirmations down here on ETH. But biggest key level to watch in order to expect this level to come in is going to be the value area low 786 at about 1834. Lose that, looking to come down here. And then key level for much of a bigger move down towards 1600 is going to be losing the POC at 1734. Somebody asked, who was it? Oh, yeah. Let's check out silver. Let's see here. Just going to look at the trading view chart. Oh, we already have a silver chart here. We have not looked at this in forever. Pretty much ever since. We never even looked at this after we got the dumps to the downside. I know that because the last fib we have pulled here locally is up here. This is the last time we looked at it. So just to give you overall thought process here, right? Obviously, silver was on an absolute screamer here. Major Fibonacci retracements, kind of just slammed right through them. You got a little interaction, little bump, flip it to support. But you did get into these Fibonacci extension levels are always going to be the best place to look for those targets, in my opinion. It doesn't mean that the first one's going to be the target, but typically when the top comes in, I mean, these are going to be the big areas of interest if you're looking for a top. Again, not saying, oh my God, you hit here, the top is in. Oh my God, you hit here, the top is in. But you got to look for those confirmations if you know what to look for. Usually those signs are going to come in on these massive extensions. But we could take this off now just because those are tapped. Let's take a look here. Let's pull some anchored VWAPs here on the weekly. Weekly money flow starting to trend out here. Not that I would take this as a... Ooh. Yeah, so weekly money flow on the way out. Let's pull an anchored VWAP here real quick. Again, I don't have as much experience looking at silver, right? So I have to familiarize myself. Just see something here. Everything okay? No? Don't want to pull the anchored VWAP? Just gonna... Nothing? All right, sick. That's dope. All right, anchored VWAP's just broken, I guess. Interesting. Let's try to pull that one more time. All right, anchored VWAP will not work. I'd be shocked if that's the case that we'll get a profile to work. Sick. This is dope, guys. Awesome. Well, anyway, I don't know what to do about that. Let's reload here. Save and reload. You always got to save. Let's see here. All right, anchored VWAP broken. Can I just not pull an anchored VWAP on silver or fixed range volume profiles? Well, dang. I've been stripped of my powers, guys. I've been stripped of my powers. Should we try a different silver chart? Yeah, I don't really know what to do here. Kind of at a loss. Maybe this chart? I don't know what this is. 217,000. Yeah, not a silver guy. All right. Oh, these are all futures. Silver cash. All right, let's see. Is this like Bitcoin cash? I'm kidding. All right, I guess you just can't pull anchored VWAPs. Maybe there's a reason for that. I don't know why this is happening, to be honest with you. Somebody explain it in the chat. So I guess we're going to be stuck with MPOCs, which probably also won't work. What is going on? I've pulled volume profiles on silver before. I know I have. And the MPOCs are not going to work either. Guys, I don't know what to do here. I can't do any TA on this. It's broken. It's broken. Yeah, the Onda... yeah, this is... Yeah, maybe this... I think... There we go. Shout out to Jesse. Fixing the problem. I love it. Thank you, bro. It's weird because we had the TA on the other one. There was no profiles. But yeah, we usually I look at this chart for gold, which I know we have profiles on. So, all right, let's. You got about a 450 daily MPOCs underneath you. So I'm just gonna pull up the relevant levels here, guys. I'm not gonna spend the whole time marking up this entire chart. It's gonna take me a long time. Let's pull up the MPOC weekly. Pull up a monthly. Probably got a monthly in there too. There it is. Monthly. Now, can we pull up the anchored VWAP? Will it work? What is that? That's 2020. Let's pull it from 2022. Oh, wow. Look at that. Let's pull it from 2020. Yeah, because that was the low. Yeah, I mean, this is definitely going to be a big area. Massive anchored VWAP from 2022. 2 weekly MPOCs, monthly MPOC. Definitely a big level of support there. Pull a fib as well. Let's pull it. Let's just pull it from the low, see where it comes up. Oh, look at that. And your macro golden pocket. Interesting. I'm just going to shuffle this over real quick. Just make it nice and clean. At a later date, I'm going to try to figure out where that's pulled from. I'm going to struggle. I'm going to struggle figuring it out because I moved it, but that's okay. So you got a pretty big zone here. This sits between 53.53 and 48.08. Big zone. Macro anchored VWAP, 2 weekly MPOCs, monthly MPOC, macro golden pocket, and you are approaching quickly. So this is definitely going to be a big level. Let's pull. Don't love it. Yeah, 786 sitting right here. You guys can get a view on kind of how I look at the charts and start to mark them up from like a blank level. You also have a monthly horizontal level of support here. It's looking for confluence at this point. What time is it right now? I don't know why we're still live, guys. This is... Dang, we're going on 3 hours. Yeah, so these would be like 2 major macro key levels of support. And then, of course, this volume profile gives you context on the road. If you get accepted and push further to the downside, you have this value area giving you a perfect roadmap on where price is likely to go. Check the weekly. You got a weekly horizontal here as well. So you definitely have a lot of confluence here. Let me make sure. That's not really that clean. I'm going to put it at the bottom candle. Dailies. Yeah, I'm not even going to mark these off. Well, I guess we can. I won't make them part of the box because they're kind of just backing you up there. That's tapped. Got a daily right in here as well. Yeah, so huge level of support here. Daily money flow is in the red. You're starting to get some daily bull divs here. Kind of interesting that you're not tapping into the golden pocket, though. It makes me suspicious of a continuation down. So, yeah, this would be like the biggest level of support. I'll bring this down to the dailies. 53.67 to 47.04. biggest level of support. Once you lose that, I'd expect a pretty fast move down towards the 786 value area high monthly, sitting right here between about 35.56 and 32.55. Pulling up your VPVR, see what we can look at the volume. Yeah, I mean, look at this. You're kind of on a high volume node here. But if you do dip, right, like you could see spike in volume. Not surprised to see this clung here. Once you lose this, in my opinion, you have some of these higher volume nodes in there, like right in here, 41, 38, 36. But in my opinion, I would probably view this as the much bigger level. So my best guess there would be if you continue down, that's the biggest level of support to look at. Sure, I would expect some kind of reaction there. Once you lose this anchored VWAP, lose all this lose this golden pocket, right? Next likely stop is probably going to be the 786. This is long term, by the way, through the low volume gap, targeting the 786 to the value area high in the monthly. So something like that, kind of similar to what we looked at on the stocks and specifically the SPY, right? Like lose that anchored VWAP into this semi low volume gap. Could just be a pretty fast move up, fast move down, fast move up, fast move down, low volume gap. Low volume gap, low volume gap, fast move up. This is like the easiest, most visual way to look at the market, in my opinion. So there you go. Little bit of silver for our boy. I forgot who asked for it, but there you go. Shout out to Clapjack, said from the projects to Frankie Concepts. Shout out to Clap. Is silver a meme coin now? Wow, yeah. Obviously, silver and gold absolutely mooned. Yeah. Apparently, it's a meme coin now. Insane. Bitcoin just still wobbling here. Oh, some charts you need to pay for the data. Interesting. That's probably why that wasn't working. Can you use volume profiles on charts like ETH BTC? Yeah. I think I have one on ETH BTC. I do. There it is. So yes, you absolutely can. You could use it. I mean, listen, at the end of the day, I use volume profiles on everything. Like even Bitcoin dominance. Like Bitcoin dominance, people will tell. Like I've had people tell me. I got to pull it up over here. Let me pull it up. Right, I've had people tell me, you can't use Bitcoin volume profiles on Bitcoin dominance. It makes no sense. Sure. But I won't go through the whole thing. I've covered this a lot in the past. Is this February? Yeah, February. Alt season, alt season, alt season. Oh, my God. Your favorite influencer, alt season. Oh, God. It's going to pump your bags. All we see is the flip of this value area low. Very likely push into the value area high. We got the big wick, retested support. I don't know about alt season, man. Back to the POC. So, it works. Regardless, when it stops working, I'll stop pulling them. Don't let people talk you out of something that works. Now, listen, if you're doing something and it's not working and someone says, hey, that doesn't work for this reason, obviously take that into account. But, we've used many things that people say you can't use on the DXY. It continued to help us make these calls. And, I'll stop using it when it stops working, right? I wouldn't use it if it didn't work. All right. No, USD is the meme coin. Yeah, for sure. Shout out to Clap, said Frankie's risk management is so great due to his patience, and yeah, I've had a few too. Shout out to Clap. What is my opinion on Plasma XPL? Is it dead? Its chart is doomed, and unfortunately, I have a big bag of it. Shout out to Mohammed. This will be like the last thing that we look at. I don't want to get stuck in the altcoin rabbit hole here 3 hours into the stream, but I'll take a quick look. I mean, listen, there's nothing I can look at this and say, that's it, it's dead. Does this chart look bullish? No. I wish I could just give you a straight answer. Like, no, don't worry. Like, buy it. It's cheap. I mean, it's obviously cheap. At least right now, at least relative to this. I guess this was the launch. I don't know a lot about this. I don't know a ton about the project. As a matter of fact, I don't know anything about this project. I'm also not like a tech expert, right? Like I will share things that I'm well experienced in, things that I know about, which is the charts and trading, right? I don't know what this project does. And even if I did, I don't think I'm really the person to be like, yeah, I like that. I would have to do deep research to tell you if this was like, I don't know about it, right? So I can't say I believe in it at all. If I knew a little bit more about it, maybe I could. From a chart perspective, there's, I could tell you if it looks like it's going to recover or not. Of course, it's going to be very difficult. I assume, let me see something here. I believe that is probably all of the price action. Yeah. I don't have any weekly information on this. I don't have any 6-day money flow, no 5-day money flow. No 3-day money, or no readable 3-day money flow. Yeah, there's not enough. There's only so much I can do with this chart because there's not enough history to at least tell you like, hey, you have a massive weekly bullish divergence with money flow coming up. Like I just don't have the information. So really, the only thing I can do here is like short-term analysis, which again isn't going to really help you for the long term. So, yeah, I apologize, bro. I wish I could give you a better answer, but I just don't have the information. So there's nothing, no magical answer I can really give you to tell you if this is dead or not. Does it look bullish? No. But maybe if this is like the best tech ever, maybe it's a good time to accumulate. I just can't really give you a chart perspective because I don't have a lot of, or at least a high time frame chart perspective because I just don't have the information. I can look at the 4-hour and tell you, well, hey, money flow's trending up. I could pull key levels, but it's really not going to help for the long term to answer your question, unfortunately. It's just the situation you're in with a lack of information, right? I mean, one thing I will say is you do not have a weekly bullish divergence, and I would assume, right, which would be a big thing I would like to see to indicate that there's a major bottom coming in. The only problem with that is if this does go and take this low, I don't think this will be a divergence. I think this wave will probably break the previous wave, giving you no divergence, which it's kind of a bummer. Doesn't mean you have to take the low, right? Like, who knows? I'll give you this. I'll give you this. This is critical. I don't want to leave you with nothing, all right? But this is absolutely critical. Actually, what I will say is this is critical. Take the golden pocket off the chart. Whoops. If you do not hold 7 cents, essentially 0.073 to 0.069, I mean, this is your line in the sand to get back up here. If you lose this and you can't reclaim it, I mean, I'd be looking for new lows. It's very difficult for me to pull up levels to look at below. What you would have to do is really pull up extension levels, which is not my favorite thing. When looking for new lows, I prefer to look for new highs there. But, if you lose this, you could be potentially headed down to about 4 cents. But again, that's if you lose this, right? If you can hold this, get back up in here, right? Maybe you can chop around, get a little more information, and then maybe recover. But again, I don't know a lot about the project. So there you go. Watch 0.045 if you break about 7 cents. Must hold this. If not, down here. So there you go. And then, of course, you could probably pull. Yeah. And then, again, this is not, again, I know you asked for my opinion on if this is dead or not. But just to give you some key levels to pay attention to, that'll give you a little context. If you do come down here, get a bounce, your goal is to get back above 0.083, get accepted back into this profile, and then at least your inside value. What this looks like when you get up there, I'm not sure, but there you go. At least some key levels and a little bit of context. Value area low at 0.082, POC 0.093, and your value area high at 10.5 cents. So there you go. Hopefully that helps you out, Muhammad. I wish I'd give you a straighter answer. Said that's the most helpful analysis I've had in my life. Thank you, Frankie. Well, I'm glad that helped you out, brother. Can you do TA on the S&P 500? Shout out to Anthony. Welcome in, brother. We just looked at the SPY. Just scrub back a few minutes, and you'll see all that full analysis. Very interesting. Hit the like button an odd amount of times with anything you hit the like button an odd amount of times with anything you like. Hit it with your cup of coffee. Hit it with your elbow. Creepily fondle it. I don't know. I don't really care what you do. Just touch it an odd amount of times. But there you go, guys. Let's check back in on Bitcoin. Still just wiggling around. So there's your local range. If you just tuned in, I'm not going to cover this again just because I've covered it so many times. Just scroll back to the beginning of the stream, go past the FOMC live stream, and check out the charts. Nothing has really changed. We'll see. I'll be sitting on my hands. I won't be shocked if I get stopped out of my long position here in profit. Totally fine. I'm either waiting for my key level down here or my key level up here for my next local trades. To the downside, 62, 691. To 62.2. To the upside, we have 65.2 to 65.967. And over the medium term, just to give you guys overall direction here, where's my current range? My brain is starting to turn off. It's been too long. I will be looking deviation above the high, accepted into the range. POC, can't get out. If we can't reclaim this POC, guys, the next magnetic target sits down there at the value area low at 60K, 61K rather. And then this is going to be decision time for Bitcoin. This is going to be a big live stream when we come down here because it's going to be absolute decision time. See if we could sweep that liquidity and hopefully not lose the 786 for a drop down below 60K. This is the biggest level on the chart to the downside, and the biggest level on the chart to the upside for a massive move up is still going to be about 68K. So no reason to be looking up towards $75, $77, even $70,000 as long as we remain in this profile. We have to break above 68K to start looking at those targets. Biggest level of resistance, aka doorway to a massive pump to the upside, which daily money flow is still keeping an open door for, whether we have to come up and do it now or pull back, which I do think is probably the higher probability scenario right now. That is still open. And if we come down to 61K and we lose this zone, can't reclaim, I will be looking for the drop below 57.6. And I'll keep you guys updated every step of the way. You might probably be asking yourself, well, like, how do I know if it's going to lose this? Well, you subscribe to the channel, and as soon as it happens, we'll be live explaining the price action to you and letting you know what I'm doing personally. So with all that being said, guys, thank you all for tuning in. I appreciate you guys for hanging out with us here on this beautiful FOMC live stream. Another kind of boring FOMC day, but yeah. We'll see what happens. Shout out to Jose. Shout out to Vitrol. Shout out to Jesse, Clapjack, Yusuf Fuego, Brillo, Iron, Vitrol. I think I said Vitrol already. Mohammed. And last but not least, Anthony, who's probably in the past looking at the S&P analysis. Shout out to Jesse and Darren for holding it down for this very long live stream. I will see you guys tomorrow. Make sure you like and subscribe to the channel if you want to use any of the tools or exchanges that I use in this. Well, I didn't show any trades today. Maybe I'll pull it up in the fake out. But check the links in the description down below and help support the channel. That's all I got. Hasta pasta. Thanks for running a marathon stream and breaking it all down. Of course, shout out to C-Town Baller. That's what you get here on the Frankie Candles YouTube channel. I'll see you guys tomorrow. Hasta pasta. I'm going to go play with my dog while this trash price action plays out. Bing bong!